So hi guys, this is part 2 of the costing marathon. This part will consist of roughly 4 to 5 hours around. Like I'm doing, I'm adding my intro video to this because if you accidentally watch this at first, you need to do first watch the part 1 of the costing marathon. By the way, the faculty who was dealing with the costing marathon is Srinivas Reddy sir, was rest of faculty. Almost sir has covered 15 chapters. The part 1 is almost 10 hours. What you need to do is first you need to watch part 1, only then you need to watch part 2. Otherwise part 2 may not be highly useful, though of course see in part 2 also covers important chapters like overheads and certain other chapters, important chapters, but there is an order in which you need to learn. So if you first finish whatever given in part 1, whatever now you're going to watch in part 2 will be very easy for you. So if at all you watched already part 1, you can continue watching this video. Otherwise, please go back and watch part 1 marathon. Sir, where can we find this part 1 marathon? I hope most of you would have already seen this. If not, just for your information, just go to caramharsha YouTube channel. Of course, that is where you're looking at this video. Now you go to playlist, and inside the playlist you will find CA Inter May 2022 classes. Inside that you will find all the subjects. Just let me show you right now once again. Just a minute. See, not only costing, we have uploaded many more subjects. Marathons. Like let me show you once. So you go to the playlist, you just go to the playlist and you see here view full playlist. Here you can find paper 1 marathon, paper 1 we have divided into 2 parts, 20 hours approximately. Paper 2 be other laws, company law will also come very soon. Paper 3 is there, GST marathon is there, advanced accounts will come very soon. Paper 6 is there, EIS and SM marathon is also there, and economics also will come. So just for your information, I'm showing you what are all the subjects that we have already uploaded and we are about to upload. That's it. So the conclusion is very simple. First watch costing marathon. If at all you are looking for costing marathon, first watch part 1 marathon, 10 hours marathon, and then watch this balance part 2. And by the way, with respect to the marathon material, you download rest of a CA and CMA application from Play Store, log in into that. Inside that main menu, material, study material option you'll find. Inside that CA inter material, inside that P3 costing, inside that you will find marathon material. Exclusive marathon material is given by the faculty, so you can download and take a print of it. That's it. Carry on and continue watching the marathon class. Bye bye. And also, by the way, at the end of this video, Srinivas Reddy sir has given some guidance relating to costing preparation. So follow that guidance also, it will be very useful for you. Bye bye.
Very good morning, students. Welcome to the marathon session. First 10 chapters are covered in first video of marathon session, which is already uploaded in the YouTube channel. The next topic we are going to discuss about 5 chapters. So cost accounting systems, and we'll be discussing about process and operation costing. Next, we'll be discussing about joint and byproducts. Then the overhead chapter and the introduction to cost and management accounting. So first 10 chapters will fetch you approximately about 75 to 80 marks. Remaining these 5 chapters will fetch you around 40 to 50 marks, including choice questions. Now, we are moving to cost accounting system, very important chapter, simple chapter. What are we going to learn in this chapter? In terms of cost accounting system, we are going to learn about few topics like integrated accounting system, non-integrated accounting system, reconciliation between financial accounts and cost accounts, and the treatment of under absorption of overheads and over absorption of overheads. These are the major topics we are going to discuss in terms of cost accounting system. Sir, any accounting system is established with a view to achieve something. Now, financial accounts, what is the objective of financial accounts is to find out the profit or loss and the what is the position on the particular date, that is a balance sheet date. In terms of financial accounts, we'll be having uh, real accounts, personal accounts, and nominal accounts. But the objective of cost accounting system is only for the cost ascertainment. That means we need only nominal and few real accounts. We do not need any personal accounts in terms of cost accounting systems. Okay, now let me share our notes. Please understand the process of the uh, entry flow of cost accounting systems. Then it will be very easy to understand these topics. Okay. Now, in terms of cost accounting systems. So cost accounting system is maintained under two methods. First one is non-integrated accounting system and integrated accounting system. So what is non-integrated accounting system and integrated accounting system? When separate set of accounts are maintained for financial accounts and cost accounts, that accounting system is called non-integrated accounting system. What is integrated accounting system, sir? When same set of books are maintained for financial accounts and cost accounts, that system is called what? Integrated accounting system. Now, in terms of non-integrated system, how to maintain the books of accounts? So normally the double entry system is followed for the arithmetical accuracy. So that is the reason we'll be following the double accounting system and the non-integrated accounting system as well as the integrated accounting system. Now, in terms of non-integrated accounting system, as I already said, I need all nominal accounts, few real accounts. I don't need any personal accounts for cost ascertainment. In terms of real account, I need information of stock. If you see the trading and profit and loss account, opening stock, purchases, expenses, right? In terms of here, closing stock, sales, any other income. And tell me, all these accounts are nominal accounts, whereas opening stock and closing stock comes as a part of what a real account. In real account, you may have debtors and creditors. Those are not required for cost ascertainment. Now, to maintain the double accounting system, I repeat the word, to maintain the double accounting system, if any real account and personal account is supposed to be debited or credited, we'll follow a memorandum account called general ledger adjustment account or cost ledger adjustment account. Both are same. Why we are maintaining general ledger adjustment account and cost ledger account is simply, sir, I don't need all type of personal accounts in my double accounting system. I also don't need some of the accounts in real accounting system. For double entry system, I need to debit or credit. For example, I am purchasing raw material. Raw material is stores ledger control account, debit. I need to make payment to creditor. I don't need creditor accounts and debtor accounts for cost ascertainment. In such a case, in replacing all these accounts, I'll be using an entry called general ledger adjustment account. So this is the important concept. So if you see any balance sheet, now in terms of stock will be there, which is supposed to be maintained. Remaining all accounts are represented by a concept called what? General ledger adjustment account. So this is the, so what is meant by general ledger adjustment account? Sir, to replace the nominal account, so to replace the sum of the real accounts and personal accounts, I don't need them for the cost ascertainment, because the objective of cost accounting is cost ascertainment. Now for the arithmetical accuracy, we are following double accounting system. So to replace these accounts, I am following a single account called general ledger adjustment account or cost ledger account. Clear? Now, what about the integrated accounting system, sir? In integrated accounting system, we will not maintain general ledger adjustment account or cost ledger, because in terms of integrated accounting system, both one set of books are maintained both for financial accounts as well as for cost accounts. So wherever, for example, you are purchasing item, stores ledger, you are debiting, you will create what created. So this is useful both for financial accounts as well as current account. So general ledger adjustment account or cost ledger account will be applicable only in case of what non-integrated accounting system. Clear? Now, what is the entry flow in terms of non-integrated accounting system? You will be having, these are the accounts in terms of non-integrated accounting system. First one, we have material. So in terms of our accounts, what is the entry flow or process flow? We'll be having material control account. We'll be writing here. Please follow. This is very important. Material control account or stores ledger account or stores ledger account. And what is the next expense amount? Wages control account. Then we'll be having factory overheads account. All these three are moved to WIP account or moved to what? Work in progress account. From work in progress account, it will be moving to finished goods account. While coming to finished goods account, administration overheads will also come to finished goods account. Now from finished goods account, it will be moving to cost of goods sold account. Cost of goods sold account. From cost of goods sold account, it will go to cost of sales. In between, you'll be having selling and distribution overheads. Now, when it moves to cost of sales account, now from cost of sales control account, you'll be moving to costing profit and loss account. So these are the entry flow or process flow in terms of non-integrated accounting system. Now, so what are the ledgers we are supposed to maintain under these non-integrated accounting system? Remember, this is a very important flow. Now I'll maintaining all the ledgers. Stores ledger control account. Sorry. Stores ledger control account. Wages control account. Factory overheads control account. Then, so you'll be having WAP control account. Then after moving from WAP control account, you'll be going to finished goods control account. Now, in between, you may have administration overheads control account. From finished goods control account, it will go to cost of goods sold account. From cost of goods sold account, it will move to selling and distribution overheads will be there. That is selling and distribution overheads account. Then cost of sales account. In terms of non-integrated system, you'll have general ledger adjustment account. So this is the flow. Now, what all will be debited under stores ledger account? Sir, any opening balance will be available. Opening balance of stores, opening balance brought down. Now, if the materials are procured, We are debiting stores ledger control account. In terms of non-integrated account system, we need to debit either cash, bank, or creditor. So we'll not have those things in terms of non-integrated account system. Those all accounts are replaced by an account called general ledger adjustment account. So GLA account. If items are returned, again you will reverse the entry. Normal, what is the financial accounts entry? Creditor account debit to finished goods, right? So by GLA account. Now from stores ledger, where it will move from stores ledger, it will go to WIP account. So to the extent of materials issued, it will go to by working progress control account. It will go by work in progress control account. This is related to direct material. If it is related to indirect material, it will go to finished factory overheads control account. Indirect material. Now, any balance would be the closing balance of raw material. So by balance carried out. So stores ledger accounts are debited by opening balance and any procurement. If any items are returned from production or factory rates, it will be again debited because the stores getting increased. Now, whatever if items are returned, it will go to GLA account. If items are issued, if direct materials are issued, it will be debited to WAP account. If indirect materials are issued, it will go to factory rates control account. Balance would be the closing balance of stores ledger account, which will be appearing in the closing trial balance. Clear? Now, in terms of wages control account, there will be no opening balance for wages, correct? Now, what will be there? Any payment, whether it is indirect labor payment or direct labor payment will be debited to general ledger adjustment account. Now, if the wages are related to direct wages, it will be going to WAP account. If the wages are related to indirect labor, it will be going to factory overhead account. So this is direct and this is indirect. So this is how wages control account gets closed. Stores ledger control, there would be balance, but in terms of wages control account, there would not be any balance because there will be no closing stock for labor. Now, in terms of factory overheads control, you'll make direct there will be opening balance provided if the under recovery or over recovery of overheads are not transferred to costing P&L account, there would be balance in the factory rates because the treatment of under recovery of overheads or over recovery of overheads, if the amount is, we can carry forward to the next year, we can take it to profit and loss account, or by using a supplementary rate, you can transfer, you can apportion between cost of production, finished goods, and cost of sales account, right? That discussion will be there in the overhead chapter. So opening balance, or there will be opening balance both under recovery or over recovery. Any payment GLA account, and any issue of from the stores, it will be stores ledger account. Any payment from wages control, it will come from wages control account and it will be transferred to WIP account. If any balance of under recovery or over recovery, the balance would be available on debit or credit. So if it is on credit, it is under recovery. If it is on debit, it is over recovery, right? Now, from all these three, you are moving to bottom of, you are moving to WIP control account. Opening balance of WIP would be available. Now, you are getting input from stores ledger, which is direct, and to wages control account or direct labor account. Why you are using control account set? Because the objective of costing is what cost control, cost ledger. So we always keep control accounts. Okay. And from factory overhead account, you'll be having from WIP control account, we will be transferring to finished goods account, and any closing balance will be available in the ledger itself. Now from finished goods, from WIP it is moving to where finished goods to WIP control account. In terms of finished goods account to WIP account, now if any items are moving from finished goods account, it will go to by cost of goods sold account From finished goods account, you'll be adding from administration any payment to GLA transfer to finished goods account, right? If it is related to production. So to administration overheads account, now any closing balance will be available in the balance. So by balance carried out. Now to cost of goods sold, you will be having cost of goods sold, or you can maintain directly cost of sales account also. So to finished goods account, which is carried from finished goods account, from here you will be transferring to cost of sales. Now cost of sales is debited with finished good with the cost of goods sold account, that is COGS account. Any payment of selling and distribution account to GLA account, the balance would be transferred to cost of sales. So to selling and distribution overheads account, the balance would be transferred from cost of sales. So if any items are written back, it will go to finished goods. Other the balance would be available here. So the cost of sale. From cost of sales account, it will go to costing P&L account. In terms of costing P&L account, debit is costing P&L account, and any sales would be on the credit. The balance of profit or loss will be transferred again to GL account, because capital account, the balance would transfer to capital account. Here capital account is not maintained. It will be there in terms of GL account. So that GL account will get whatever closed. So this is the concept of the entry flow in terms of non-integrated accounting system. So what all our ledgers will maintain? Will be maintaining stores ledger control account, all receipts. So all opening balance of stores ledger will be available, and any procurement will be debited to stores ledger account. Any issue from stores ledger will be credited to, if it is a direct material, it will go to directly to work in progress account. If it is indirect material, it will be transferred to finished overheads account. Sorry, factory overheads account. In terms of wages control account, all payments are debited, and if it is related to direct labor, please transfer to work in progress control account. If it is indirect labor, it will be going to factory overheads. From factory overheads, it is all accumulated and it will be transferred to WIP control account. From WIP control account, it accumulates direct material, direct labor, direct and factory overheads, and it will be transferred to finished goods account, and any balance of WIP will be lying there itself. Now in terms of from WIP control account, it is moving to finished overheads account. So finished goods control account, the finished goods control account is debited with the opening balance of finished goods and transferred from WIP, and any admin overheads will be debited. The amount will be transferring to cost of goods sold account. Now the balance will be available here. Okay. Now from cost of goods sold account or cost of sales, both are of same. From selling and distribution, it will move to cost of sale. If you remember the cost sheet, at respect to it, for example, administration overheads are considered in terms of cost of products, cost of goods sold. Selling and distribution overheads are considered in terms of cost of sales. Amongly, the process of entry flow will be there. In terms of costing P&L, all cost of sales are debited on debit side. Sales will be on the credit side. Any balance, whether profit or loss, will be transferred to general ledger adjustment account. So general ledger adjustment is a memorandum account. It will get closed by transferring profit or loss. So this is the flow of entry system in terms of non-integrated accounting system. In terms of integrated accounting system, entries are same. The only difference, instead of GLA, wherever we are using GLA, we'll use that respect to real account or personal account. For example, your purchased items, what you are supposed to stores ledger account is common, and instead of GLA account, one are supposed to make a payment to creditor. So to creditor account. Creditor account. Now we have made a payment of wages in terms of cash or bank. So you'll write down respect to cash or bank. So GLA account will not be available in terms of integrated accounting system. Integrated accounting system is both financial accounts and cost accounts are maintained in the same set of books. So there will be advantages of non-integrated and advantage of integrated, and both disadvantages also. The disadvantages of non-integrated accounting system is a costly affair because you need to maintain, say, two different set of books, two different types of labor are supposed to be included, where stationary cost would be high, and reconciliation is very complicated in terms of non-integrated accounting system. Whereas in integrated accounting system, you are maintaining all the ledgers which are of useful both for financial accounts and cost accounts. If you remember, in terms of SAP in our BPCL, we'll follow the integrated accounting system. So whatever the information required for cost accounts, we'll take it from the financial accounts entry. So you should be very careful in posting the entry itself. Okay. Next important concept which I wanted to highlight is about under absorption or over absorption of overhead. So under absorption or over absorption means more amount is included, more overheads are absorbed into the system. So that let us assume in terms of factory overhead account. I'll try to explain in terms of factory overheads account. Let us assume you have spent this one. This is incurred. Debit side would be incurred. Credit side would be absorbed into WAP or whatever it is that. If it is a administration overheads, it will be absorbed to cost of production. If it is selling and distribution, it will be absorbed to cost of sales. Now, if incurred and absorption, we need to see. If absorption is more, incurred is less, this is called over absorption. If incurred is more and absorption is less, this is called under absorption. Sir, if you want to know the entries, it is very simple. Let us take a small example. Factory overhead account. You have incurred 90,000. By using different safe, you have observed 1 lakh. Now you wanted to close this 1 lakh. That means what you are supposed to do, you should debit factory overhead account and you should transfer to what amount? Costing P&L account. Whether it is costing P&L account or supplement rate, that we'll discuss in the overhead chapter. If it is a over absorption, debit factory overhead account to costing P&L account. If it is, for example, incurred is 1 lakh and absorption is 90,000, then it's under absorption. You need to credit factory overheads account and you need to debit costing P&L account. Okay, so this is the concept, because this concept is very important in terms of reconciliation between financial accounts and cost accounts. Okay, now this is the important topics in terms of under absorption of overheads or over absorption. So ultimate objective is that if it is over absorbed, you should reduce it. You should create costing P&L account, because costing P&L amount got debited with more amount. You should reduce that amount. If it is under absorption, costing P&L amount debited with less amount, so you need to debit costing P&L account. Okay, so ultimately the incurred amount should go to costing P&L account. If absorption is more, because it is already got more debited in terms of costing P&L, so we are reducing it by creating costing P&L account. If less amount is absorbed, that means costing P&L got less amount. We need to increase in terms of costing P&L account. We are debiting the costing P&L account. So this is a simple observation in terms of overheads control, whether it is factory overhead control or administration overheads account, or whether it is selling and distribution account. Both are of the same concept. So instead of factory overheads, you may have administration overheads, and you may have a different selling and distribution. It may have selling and distribution account. Clear? No. So yeah, that is what. If it is a over recovery, overhead account control account to costing P&L, under recovery costing P&L account to overhead control account. So this is the entry flow. Now, when you're doing reconciliation between, because the cost accounting profit would be different and financial accounts profit would be different, because you are including certain items in financial account, you are not including certain items in cost accounts. Now, because of that, you may have a different profit under financial accounts and different profit under cost accounts. You need to do reconciliation of the reconciliation between financial accounts and cost accounts. Now, this is already we discussed in cost sheet. There are certain items which are included only in the financial accounts, not in the cost account. That is a purely financial expenses. Next one. There are some items of income which are considered only in the financial accounts, but not in the cost account. So these all are very important. You need to understand clearly with these concepts. So purely financial expense, purely financial income. So these are only available in the financial accounts, but not in the cost accounts. Next one. There are some items only included in the cost accounts, but not in the financial accounts, like opportunity cost, charges in lieu of rent where premises are owned, interest on capital, salary of the proprietor, notional depreciation on the assets fully depreciated, which book value is nil. So these items are available only in the cost accounts, but not in the financial accounts. Obviously, when different amounts are debited in considered in one accounting system, not considering another accounting system, so you'll be having, so the reconciliation can be done by using a statement or by using a memorandum reconciliation account. Now, so these all are very important in terms of so this is the reconciliation statement between cost accounts and financial accounts. So you can take as a base in the question, if it says that you should take this as a base, like you should take only cost accounts as base, you need to consider that only. If financial accounts are supposed to be considered, then you should consider only the financial accounts as base. Then it is more like a BRS, the difference of cash book and bank book. Okay, that is a concept here. Understood? Now, the next important point is about single plan and partial plan. Now, in terms of single plan, variances are computed and analyzed and accounted at the time of each transaction wise. That is single plan. That means, for example, at the time of procurement only, you have understood that you are supposed to pay 10 rupees, but you paid 11 rupees. Now, at this case only, you will enter material price variance. That is a transaction of single plan system. If it is a partial plan system, what we'll be doing is that you will record at 10 rupees only. Now, at the end of the period, you will find out the reconciliation. At that time, you will record the variances. So for each transaction wise, if you are recording the variance, that is called single plan. If the variances are accounted at the end of each period, that is called partial plan. And single plan is little complicated, whereas normally majority of the organization, they do partial plan. So there is a difference between partial plan and single plan. So this all you can understand in terms of our regular classes. Okay. Abnormal variance. So this is the disposition of cost variance, very important. How to close the cost variances, sir? Sir, if you are all overheads, if all variances are transferred to costing P&L at the end of each period, each P&L, each variance wise will be transferring to cost and P&L account, provided all the variances are abnormal. If the variances are normal, the variances are distributed between cost of sales, finished goods, and WAP account. Okay, because WAP of in terms of work in progress, finished goods will be having closing stock, cost of sales, those items which are produced and sold. So this is the apportionment between the cost of sales, finished goods, and WAP account. Okay. Now, quantity and efficiency are abnormal and price variances are normal. General cases is that, so any price variance is a normal variance because which is not in our control. Whereas quantity variance are within the control of organization. So normal understanding is that all price variances are normal, which are considered, which are apportioned between cost of sales, finished goods, and WAP account. All quantity and efficiency variances are abnormal, that will be considered to costing P&L account. So this is a concept of non-integrated accounting system and non-integrated accounting system. So what did we discuss in terms of cost accounting system? So the objective of cost accounting system is to find out the cost ascertainment. Now, for the mathematical accuracy, we are following the double accounting system. Now, under double accounting system, we have two types of cost accounting system. One is integrated accounting system. Second one is non-integrated accounting system. So non-integrated accounting system means you are maintaining separate set of books for financial accounts, separate set of books for cost accounts. Whereas in terms of integrated accounting system, same set of books are maintained both for financial accounts and cost accounts. When you are maintaining the non-integrated accounting system, there would be a reconciliation of profit between financial accounts and cost accounts. Now, what are the ledgers maintained in the non-integrated account system? First one is stores, wages, and factory overheads. These three will move to WIP account. WIP account will go to finished goods. They will be adding administration overheads. Then it will go to cost of goods sold or cost of sales account, and selling and distribution accounts will be added. Cost of sales will be transferred to costing P&L account. Any profit or loss will be transferred to general ledger adjustment account. Now tell me, general ledger adjustment account or cost ledger account is applicable only in terms of non-integrated accounting system. Then we have discussed that reconciliation of profit between both cost accounting system and financial accounts, because there are certain items of income and expense which are considered only in the financial accounts but not in the cost account. There are certain items of incomes or expense which are considered only in the cost accounts but not in the financial accounts. Reconciliation statement can be prepared in terms of a statement or by an account called memorandum reconciliation account. Then we have discussed about disposition of variances. So if the variances are normal, sorry, single, we have discussed about single plan and partial plan. In terms of single plan, when the variance is computed for each transaction, that is a single plan. What is second one? Partial plan. So if the variances are accumulated and analyzed and accounted at the end of each period, that is we call as partial plan. So it all depends how your organization decided whether to go with a single plan or partial plan. So in terms of variances, if this normal variance will be a portion between cost of sales, WIP, and finished goods. If it's abnormal variance, will be charged to costing P&L account. General assumption is that all price variances are normal and any quantity or efficiency variances are abnormal. Like for example, your prices are getting increased in terms of diesel and petrol. Can we control that? So those variances we assume it to be normal, and there are some impact of efficiency and quantity effects that will be considered as abnormal. So abnormal variance will be transferred to costing P&L account. Normal variance between cost of goods sold, finished goods, and what is third one? WIP account. Clear? Right. Now let us move to problem number 3. We have decided to work problem number 3, problem number 4, and problem number 15 in terms of cost accounting systems. Okay, right. Problem number 3. It is a page number 30. Right. As of 31st March 2016, the following balances exist in the firm's cost ledger, which is maintained separately on a double entry basis. So whenever you observe cost ledger control account or general ledger account, please understand this accounting system is non-integrated accounting system. Now, when your trial balance, it should get tallied. What is meant by balance in stores ledger account 3 lakhs? That is the closing balance of raw material, or sorry, opening balance of raw material. Work in progress control, opening WAP. Finished goods account, opening finished goods. Manufacturing overhead account, there is a credit balance. How much amount credit balance amount? 15,000 credit balance. So what would have happened in the last year? If you may get confused with over recovery or under recovery. Let us assume that last year you have incurred 1 lakh and you have spent only 85,000. That is the reason credit balance appeared, correct? No, sorry. So last year You have incurred 85,000, whereas you have transferred 1 lakh. So what is the balance available, Amma? The balance available credit is 15,000. What does this mean? This is absorption, this is incurred. So this is the over absorption in the last period. So over absorption of overheads. Okay. So this is the opening trial balance. Okay. Now, in the next quarter, the following items arise. Finished products at cost, how much amount? 2,25,000. Manufacturing overheads incurred 85,000. Raw material purchased 1,25,000. Factory wages 40,000. Indirect labor 20,000. Cost of sales 1,75,000. Material issued to production 1,35,000. Sales returned at cost 9,000. Materials returned to supplier, how much amount? 13,000. Manufacturing overheads account charged to production. That means how much is absorbed into production amount? 85,000. You are required to prepare the cost ledger control account, stores ledger control account, work in progress control account, finished goods ledger control account, manufacturing overheads control account, wages control account, cost of sales account, and trial balance at the end of the each quarter. Now we'll prepare those ledgers right now. So I'll be preparing general ledger adjustment account, which is a cost ledger account. General ledger adjustment account, stores ledger. In the examination, they may ask you to write down the journal entries, or they may ask you to work out the ledgers directly. Wages control account, so I'll write down here. General ledger adjustment account, stores ledger control account, wages control account, factory or manufacturing overheads control account, WAP control account, finished goods control account. Then we have cost of sales account. Instead of costing P&L account only, I'll look after cost of sales account and trial balance at the end of each quarter. Debit, credit, you should get the closing balance, right? Now, first, what are the information they're given? Please try to put it down. Cost ledger control account, what is closing balance? 6,85,000 by balance brought down 6,85,000. Then manufacturing overheads control account 15,000, right? So by balance brought down, how much my balance brought down? 15,000. Now debit stores ledger to balance brought down 3 lakhs. Work in progress control account, opening WAP to balance brought down. How much amount? 1,50,000. Finished goods control account to balance brought down 2,50,000. Correct? So these are the amount. Now we'll move one by one. So the amount, first point is finished product at cost 2,25,000. That means from WAP it is transferred to finished goods. So by finished goods control account, how much amount? 2,25,000. In finished goods, to WAP account, 2,25,000. Manufacturing overheads incurred. How much is manufacturing overheads incurred? 85,000. So manufacturing to GLA account, how much amount? GLA account, how much you have paid? Incurred on the debit side, absorption on the credit side. To GLA account, how much you have incurred? 85,000. Now in GLA account also, by factory overheads control account or factory overheads account, 85,000. Raw material purchase, how much amount? 1,25,000. To stores ledger, to GLA account, how much you have procured? 1,25,000 in GLA account, because this is a replication of all personal accounts and normal real accounts. Part of the real accounts are not required in cost accounting. That is the reason. We are replacing with general ledger adjustment account. So by stores ledger account, how much amount? 1,25,000. Next one. Factory wages, how much they are paid? Factory wages 40,000, correct? So factory wages 40,000, indirect labor 20,000. So both will go to as a part of wages control account. To GLA account 60,000, by wages account 60,000. Out of wages, if it is factory wages and indirect labor is 20,000. Indirect labor will go to factory overhead account. Direct will go to WIP account. Now, similarly, we'll go factory overheads to wages control account, 20,000, to WIP to wages control account, 40,000. Now, how much is the cost of sales amount? Cost of sales is 1,70,000. So from finished goods, we'll move to cost of sale. By cost of sales, how much amount? 1,75,000. So to finished goods control account, how much amount? Cost of sales 1,75,000. Material issued to production 1,35,000. So from stores ledger to WIP, source ledger to WIP, how much amount? 1,35,000. So in WIP account to stores account, 1,35,000. Next one, sales returned at cost. How much amount sales returned at cost? 9,000. So from cost of sales, again, it will move to finished goods, because whatever is transferred, debited, it should be at cost only, because finished goods are valued at cost. By finished goods control account, in the question itself, it is given cost. If it is a profit amount, you should turn it to cost amount. Be careful. 9,000 to cost of sales account, 9,000. Materials returned to supplier, how much amount? 13,000. So from stores ledger by GLA account, 13,000 to stores ledger account, 13,000. Manufacturing overheads charged to production, how much amount? 85,000. So from factory overheads, it will move to WIP account. By WIP account, which is absorbed, 85,000. So to factory overheads account, how much amount? 85,000. Now, all entries are posted. We'll do the balancing. First, come to stores ledger account. In stores ledger account, opening balance 3 lakhs, procurement how much amount? 1,25,000. Your transfer to WAP, factor it's nothing. GL account 13,000. By balance brought down, which is the closing stock of material. How much you are getting? 4,25,000. 4,25,000 minus this amount, you're getting 2,77,000. Now this is go as a part of trial balance, right? Source ledger account, debit side 2,77,000. WAP account, finished goods account, factory overheads account, general ledger adjustment account. Right now, wages control account got balance, no balance here. Now come to factory overheads account. So total 1,05,000. Here it is how much amount? 15 plus 85. How much amount? 1 lakh. So by balance carried down 5,000. This is under recovery. Because you have incurred 1,05,000. You have observed only 1 lakh. 5,000 is under recovery. When it comes to WAP account, see here 1,50,000 plus 40, 190 plus 135 plus 85. What is the WAP account total? 4,10,000. Out of this, you have transferred 2,25,000. Balance would be the by balance carried down. How much is the balance carried down? 1,85,000. In terms of finished goods account, 2,50,000, 2,25,000, 9,000 transferred to cost of sales would be the balance carried down. How much would be the finished goods account? This is 4 lakh, 2,50,000 plus 225 plus 9,000, 4,84,000 minus 1,75,000. Balance would be 3,09,000. Cost of sales, it will be transferred to balance carried down, because you don't know what is the sales amount, otherwise you would have transferred to P&L account, right? So how much would be balance? 1,66,000. Then you need to transfer, you need to check the balance of general ledger adjustment account. So general ledger adjustment account to balance carried down 6,85,000 plus 125 plus 85 plus 60, 9,55,000. Simple, right? Minus 13,000 would be 9,42,000. If you see all the balances here, WIP, what is the closing balance? 1,85,000. What is the finished goods amount? 3,09,000. 5,000 factory overheads under recovery. So that is also, so that is a under recovery means debit balance, right? And what is the amount of general ledger adjustment account? 9,42,000. If you see the trial balance got matched, 9,42,000, 9,42,000. So this is the concept of under uh, maintaining of the cost records under non-integrated accounting system. So dear students, please understand, you need to prepare respective ledgers. So we need to understand what would be on the debit side, what would be on the credit side, and then you need to balance it off. So entry process is simple. If you're writing procurement of direct material, stores ledger account debit to GL account, unless if you know the ledger, it will be easy to write down the general entry also. Okay. Now this is question number 3. Then we'll be moving to problem number 4, which is of journalize the transaction if it is an integrated accounting system. So very simple in terms of journal entries, and whether this is integrated accounting system or non-integrated accounting system. Journalize the financial following transactions assuming cost and financial accounts are integrated. Materials issue direct, how much amount? 3,25,000. What is the entry will post? Tell me. Direct materials will go from where? To WIP, it will be debited to stores ledger account. If it is indirect material, Instead of WIP, it will go to factory overheads account to stores ledger. Allocation of wages. Total you have paid 6,50,000. Wages control account debit to cash or bank or creditors. Allocation out of 6,50,000, 25% is indirect, 75% is direct. Direct wages will move from WIP to wages control. If it is indirect wages, factory overheads to wages control account. Clear? Under absorption of overheads. No, under absorption of factory overheads. If it is over absorption means costing P&L was already with full amount. It's already debited. We need to credit factory overheads and debit what over absorption, right? Over absorption means already costing P&L was with more debit amount. I need to credit costing P&L and debit factory overheads. If it is under absorption, costing P&L account debit and to administration overheads. Or you can see like this. Over absorption means what? Absorption is more. If it is 2,50,000, assuming this would be 0. Now I want to close this account. What I should do? I should debit factory overheads, transfer to costing P&L account. Similar is the administration overheads. Payment to sundry creditors account debit to bank, because this is integrated. Otherwise, if it is a non-integrated accounting system, will not post any entry because it is GLA to GLA account. Collection from sundry debtors also will not post, because so if it is integrated, yes, bank account to sundry debtors. If it is a non-integrated accounting system, will not post any entry because it is GLA to GLA account. Okay. Problem number 15. R Limited showed a net loss of 35,400 as per their cost accounts. It is more of if you remember the bank BRS statement, what would be the, you can do both ways, debit balance as per bank statement or credit balance like OD statement, right? This is also like that. R Limited showed a net loss of 35,400 as per their cost accounts for the period ended 31st March 2016. Now, however, the financial accounts disclosed net profit of 67,800 for the same period. The following information was revealed as a result of scrutiny of the figures of cost accounts and financial accounts. Now, we'll do both. Finally, what did they ask you? Prepare a reconciliation statement by taking costing net loss as base. This is very important. You can consider, you can work out with financial accounts as base or costing loss, but in the question they ask you to work out based on costing net loss. Okay, now we'll work out here itself. What is a costing net loss amount? Costing net loss is 35,400. Now, profit is 67,800. Now let us work out one by one. Administration overheads under recovered. Now see here, administration overheads under recovered. Under recovered means in costing accounts, cost accounts, see here, in cost accounts, the debit amount is less. You're not charged full amount, you're charged less. Now what I should do? I should debit my costing P&L account. That means I should reduce my profit or increase my loss. I repeat the word. First thing is that I should reduce if it is a profit number, I should reduce my profit. Because it is a loss, I should increase my loss. So add 25,500 should be added. Next one. Factory overheads over recovered. Opposite to this. Depreciation undercharged in cost accounts. That means you need to increase your cost accounts loss or reduce your profit. See here, you should think in a different way. I didn't take a simple question. I have taken a complicated question which they can ask in examination. Undercharged means my costing loss is less because I would have got more amount of loss, but I got less loss. So I need to increase my loss. So add this one. Dividend received dividend is not considered, right? So dividend received, how much amount? 20,000. Dividend is considered only in the financial accounts, not in the cost accounts. So this amount I should, so this dividend amount, what I should do, I should reduce it off because I need to reduce my loss. Loss due to obsolescence charged in financial account, which is not charged in the cost account. That means I need to increase my loss. So you need to add loss 16,800, add. Income tax provided in the financial accounts, but not in cost accounts. That means your costing loss would have been more if it is would have charged. So that is the reason I need to increase my loss, which is loss of 43,000. I need to add to my loss, right? 43,600. Bank interest credited, I need to reduce my loss. So minus 13, because it is considered only in financial accounts, but not in the cost accounts. I'll put like this because you may get confused. Now, next one. Opening stock, value of opening stock. What is the difference of opening stock in cost accounts and financial accounts? 15,000 more in cost accounts. That is the reason your loss is more, right? So I need to reduce it my loss. What is the amount? 15,000. Opening stock, how much amount? Sorry, 20,000, right? So 20,000 amount, I should reduce it, right? So minus. Closing stock, what is the difference? Closing stock 7,500, which is more in financial accounts is more. So I should reduce my loss of 7,500 in this case also. It is 6,500. Next one. Goodwill written off in financial accounts. It is not written off in cost accounts. If it would have been written in the cost accounts also, my loss would have increased, right? So I need to add my loss. Notional rent of one premises charged in cost accounts 60,000. I should reduce to compare with my financial accounts. Provision of doubtful debts. Yes, I need to increase loss in the cost accounts 15,000. Now see carefully. If the figure started with, if the figure started is of profit, the understanding is different. If profit is to be increased or profit is to be reduced. If the figure started is loss, then you need to understand in different way whether my loss should be increased or my loss should be decreased. Now assuming one important point, income tax provided. Sir, if the same income tax is provided in the cost accounts, your loss would have been increased more. That is the reason you are increasing your loss by another 43,600. Same is the concept. So for 35,400, if I add 25,500 less 1,35,000, add 26,000 less 20,000, add 16,800, add 43,600 less 13,600 less 20,000 less 6,500, add 25,000 minus 60,000, add 15,000, you would be getting a profit of 67,800, which is the profit as per financial account. Normally, if you get these numbers in positive means for final total, if it is positive, it is a loss as per financial account. If the final number is negative, that is a profit as per financial account. The reason is that when you would have started loss with positive figure, if you're getting loss at the end also positive figure means that is a loss as per financial accounts. If you're starting with positive number in the initially, then the loss at the end, the negative at the end means that is a opposite to loss. What is opposite to loss? Profit. Clear? So this is the important concept in terms of non-integrated accounting system or integrated accounting system, more precisely cost accounting system. So if they ask you memorandum reconciliation account, same amount. If it is started with credit, so if it is all to be added on the debit side, reduce credit side. So the same concept, instead of statement, you can prepare in the memorandum reconciliation account. So please do this. This is a very simple chapter where you can fetch 10 marks from the examination, please do not leave it off. Okay, so important points is entry flow of accounting system, understanding the difference between financial accounts and cost accounts. Those are the items which are included only in the financial accounts. Those are items only included in the finance cost accounts. Those are items which are excluded from the financial accounts. Those are items which are excluded from the cost accounts. These, you are supposed to be very thorough with this case. Then important theory part is single plan and partial plan, that also I have discussed, and reconciliation statement also I explained. So if reconciliation statement, if it is starting with loss, be careful. If it is a profit, normal like your BRS only. Okay, so please do it, and happy learning. Very good morning, students. We have discussed the cost accounting system in the previous chapter. Now we are moving into process and operation costing, which is a 12th chapter of our Marathon session. Hope you are doing well, and you have revised all the topics. So before you are listening to any Marathon session, please go ahead to the respective chapter, please revise it, and then come back to the Marathon session. I'm telling you that whatever you are teaching in Marathon session is only a crux of all the points. The detailed explanations are available in the Sresta app. If you want, for example, in stand costing and variances, we have finished in 1.5 hour. But if you go and see, even you can check in the YouTube channel, uh, where you'll be getting 12 to 13 hours of stand costing chapters, very detailed. Okay, so in Marathon session, I should not take more amount of time, and it's more of examination oriented. I'm moving little bit fast in terms of Marathon sessions. Okay, and wherever I feel that this point would be left by the students, that is, I am highlighting it. Please revise it. Okay, and please download our materials, our Marathon material, our classroom material along with solutions. So, and do the ICA problems. I am sure that you'll get good amount of marks in the examinations. Okay, right. Now we'll move to the process and operation costing. And the important point in terms of when it comes to process and operation costing, process costing is different, operation costing is different. In terms of process costing, the product is homogeneous. That means a product, final product will come into picture when it is processed in more than one process. So that is the concept of process costing. Now, in terms of process costing, the main important point is the valuation of work in progress, because I'm not giving introduction to the process costing, because introduction will take another 1 hour, right? So major part is that here the valuation of work in progress is very important in terms of process costing. WIP, here we can work out either on FIFO method or weighted average method, or in terms of LIFO method. Many students get confused here in terms of valuation of work in progress. So that I will be taking very care in terms of our discussion. Then now in terms of, and we have also have inter-process profit. Yes, if question wants to be little tough, they may give you inter-process profits also. That also I'll be discussing in our classroom session. Now, how will you get the steps in process costing? Here you'll be accumulating material cost, labor cost, and overhead cost. And always remember, the output of one process would be the input of another process. This is very important point you need to understand. The output of one process would be the input. That means the output, let us assume in process one, it is completed, but that would be a input raw material cost for process two. And you will have again some raw material cost, you'll have again some material cost and overhead cost. So that is again new introduction cost, or newly introduced cost in process two. So material one output cost will be the basic input cost for process two plus extra cost incurred in process two. Then again we'll have from process two to move to process three. Whatever the cost incurred up to process two would be the raw material cost for process three plus extra raw material, extra labor, extra overheads. Finally, it will be transferred to what finished goods. Then you'll be having three concepts here: normal loss, abnormal loss, and abnormal gain. Normal loss is which is common, which cannot be avoided. So that normal loss cost will be recovered from the good units. Abnormal loss abnormal loss amount will be charged to costing P&L account. That is not as a part of process cost. We'll create that abnormal loss units. And abnormal gain. So normally you should not get any abnormal gain, but due to calculations, you may get abnormal gain. That means your output is more than input. In such a case, abnormal loss and abnormal gain, you should assume that that is 100% complete with respect to material, with respect to labor, with respect to overheads. And this abnormal loss and abnormal gain will be transferred to costing, profit and loss account. Clear? Right. In terms of valuation of work in progress, I will keep it for some time. Then I'm discussing now the inter-process profits. So normally process one cost is transferred to process two at cost value, and process two is to process three, process three to finished goods, finished products. Normally what happens is that if there are something inefficiencies in one process may not be captured properly uh, in the whole organization. Let us assume process one employees are very sincere, they are doing very hard work, they are reducing the cost, giving more efficient. Process two are not efficient. And what happens when you see the overall cost, we assume that process one and process two will put together, will see total. So normally in the organization, if you see that sales department people enjoys, and whereas production department who really works for the product, they may not get good amount of budget. So to overcome that, what happens is that to motivate the each process manager or department manager, I will not transfer my product at cost. I will be transferring my product at cost plus profit, so that the head of the organization, the board of directors, the directors, they can evaluate each process whether each process is profitable or not. Now, if your process one is doing very well and you're getting profit, process two you are getting loss, then you will try to rectify the process two. So that is the reason, instead of transferring my output at cost, I'll transfer it my output at cost plus profit. That is the inter-process profit. Now it comes to operation costing. So the product cost system used when an entity produce more than one variant of final product using different materials but with similar conversion activities. That is we call as what operation costing. So operation costing is also hybrid product costing. So where material costs are accumulated by job order or batch wise, but conversion costs are accumulated by department. So again, we'll assign the cost. So our discussion in terms of CA Inter is more about process costing only. Okay. Now, we'll also discuss 1 minute, Amma. I'll discuss from quick revision material. Equivalent units is very important concept here. Sir, why you need equivalent units? Because at the end of each process, every unit is not completed 100%. That means let us assume in working process, you might have used 100% of raw material, but you might have used only 50% of labor and overheads. Now tell me, for example, if I incur 100 rupees cost for two products, one product is fully completed, the other product is not complete 100%. If it is only 50%, can I divide 100 rupees by two units and assuming that cost of final finished product is 50, cost of unfinished product is 50? No. To overcome that, if you remember even the service costing, we are using a concept called equivalent completed units method. That means, for example, first unit is complete 100%, so it is stated as 1. If second product is completed only 50%, treated as only 0.5 of the finished product. Now what you are supposed to do, total cost is 200 divided by 1.5. Correct? So then you can apportion what is the cost of finished product, what is the cost of unfinished product. So that is the concept of equivalent units. Now, important points while valuation of work in process, you need to understand very carefully. I'll be discussing FIFO method and weighted average method separately for this discussion. So process and operation costing. So what is FIFO and average method? Now we need to work out the equivalent production units. Under this method. Here, to find out the cost of each equivalent unit, both under FIFO method, average method, we need to prepare two statements. Equivalent production, next statement of cost per unit. Now, in each method, the calculation bit. So what assumes under FIFO is that, while calculating equivalent production units, see carefully. FIFO, you would have incurred opening stock value, opening units with a different percent completion. Let us assume materials are 100% complete, labor and overheads 50% completed. Assume 100% complete and 50% completed. Okay. And for this, you might have incurred a cost of somewhere about 5,000. Now, while calculating equivalent production units, always remember your input, output, total number should be same. That means, for example, in terms of FIFO method, so you'll be having opening WAP, next units introduced. When it comes to output, sir, FIFO method means what? Sir, which are uncompleted at the beginning of the period first should be completed, and the introduced units, that means closing WAP will come only from units introduced. That means out of completed units, it includes which came from opening WAP. Second one, which are introduced and completed. And you have a closing WAP which is coming only from where introduced and completed. Let us assume opening WAP 1000, units introduced 10,000. Total input 11,000. Out of, let us assume you have completed 9,000 units. Now tell me, these 9,000 units completed under FIFO method, first it should have been completed from where? From the opening work in progress of 1,000. To what extent? Material is already completed, so you have not incurred any cost for material. For labor and overheads, 50% is completed, so balance 50% you have worked out in the current period. Units introduced and completed. Out of 9,000, if 1,000 belongs to opening, what is balance? 8,000. So 8,000, 100% material, 100% labor, 100% overhead. What is balance now? Balance amount is, if there is a normal loss, we'll take units only, but percentage is 0% complete because that cost will be borne by good units. Abnormal loss will reduce. Whatever is closing WAP comes from where? Introduced and completed. Now we'll work out what is the equivalent unit. How to find out the cost? See here, in terms of cost of the process, when you are working out the cost of the process, now you are supposed to consider only what is the cost incurred for this process in the period. That means you should not consider opening valuation while calculating statement of cost per unit, because what did you consider in equivalent units? In equivalent units, you have considered, sir, to the extent of amount spent in the current period, what is the completion? That means if you have spent now 1 lakh rupees, 1 lakh is completed, 1 lakh is spent for which products? From opening stock, I have not spent any amount from material. Out of this 1 lakh, I have spent only for what? Labor and overheads. For introduced and completed, yes, I have spent only from 1 lakh. From closing WAP, I have spent from 1 lakh. So when you're working out statement of cost per each unit for material, labor, and overheads, you should consider only that amount of cost which is incurred during the period. Understood? So under FIFO method, what you are supposed to do is that When you're considering equivalent unit, you should have considered those units which are produced by incurring the current period cost. That is FIFO method. That means in the current period, if you have spent 1 lakh, 1 lakh is spent for what? That only should be considered. If 1 lakh, whether 1 lakh is spent for opening WIP material cost, no, because this is spent in the last period. So you should always remember that you should always consider what should be included in the statement of equivalent units under FIFO method. You should include only to the extent of production or only to the extent of which you have spent during the current period. This is under FIFO method. Clear? Now, when it comes to weighted average method, you consider input both 1000 opening WIP, introduce 10,000. Now you work out what is the total, because by average you should consider both opening and current production. Out of completed units, whether it coming from opening work in progress or closing work in progress, you are not mattered. How much you have completed? 9,000, sir. Which is complete how much percent? 100%, 100%, 100%. Closing WIP we consider 2,000. 100% material, 50% labor, 50%. Now you need to work out statement of cost for each unit, including, so when you're working out statement of cost, opening cost you should consider and current year cost you consider, because while working out equivalent units, you have considered even the last year closing working progress, which is opening working progress completion also. Assume that out of this 9,000, 1,000 units is taken from where? Last year, which is already 100% is complete with respect to material. But that amount also considered in the equivalent, because weighted average is what? Opening cost and current year cost divided by opening units, current units. So while calculating equivalent units, you should consider opening. While calculating statement of cost also, you should consider opening work cost. Then you work out the cost per each unit. So this is only the two difference under FIFO method and weighted average method. LIFO method is different. What is LIFO method says that first you should complete from what is introduced. Opening will remain the same if closing work in progress is available. So LIFO says that complete first which are introduced and then complete the opening. See, which is not realistic. So majority time in the examination, they'll be asking FIFO method and average method. So in FIFO method, while calculating statement of cost per unit, don't consider percentage of completion for opening work in progress, which is already completed. Only consider balance portion. In the statement of equivalent cost also, you should consider only the cost which is incurred during the period. Under weighted average method, consider opening completion and opening cost and current year cost and the current period cost and current period completion. Find out the cost for equivalent unit. So based on that, you need to value the work in process. Okay, right. Here, this is only explained here, but you should think logically, Amma. So opening WAP, see under FIFO method, finished out. Units complete and transfer to next process less opening WAP. Under average method, finished output is equal to unit completed and transferred. So equivalent units for WAP is calculated only under FIFO method. Under the average method, it is not shown separately, because what is the balance spent in opening WAP only supposed to be shown if it is a FIFO method. If it is weighted average method, please consider total finished output, normal loss, or abnormal gain, calculate closing WAP. But always remember this input should match. Equivalent units will get deferred. Okay, you should first match what is input output, then you should work out the equivalent units. Once you have worked out equivalent units, based on this equivalent units, find out the statement of cost for each unit, then you need to value the WAP. Okay. Problem number 3. Computation of equivalent production and cost per equivalent unit under LIFO method. From the LIFO method, yes, it's not required, Amma. So if you want, you can show. So I'll show the answer also if you wish. So under LIFO method, what happens is that So under LIFO method, first you should finish with the which are introduced during the period. See here, opening working was 5,000 units, 50% completed. Units introduced how much amount? 10,000. How much is completed? 7,500 units were completed and transferred to next process. So the assumption is that out of these units produced, only 7,500 is completed. What is the closing work in progress? 7,500, which are 50% complete. Now, if they ask you to work out equivalent production units, now first input, output. What is opening amount? 5,000 minus 10,000. Completed, see carefully, which are completed? 7,500, which are from current year cost. Closing account profile. Out of the 7,500, which are coming from opening, how much amount? 5,000 units. So that means you have not worked out anything amount for this 5,000, and remaining 2,500 is from currently introduced, which are not completed. So when you are calculating equivalent production units, see carefully. Out of the 7,500, 5,000 you have not worked on anything. 0%, 0%, 0%. For this 2,500 complete only how much percent? 50%. Now what will, this is 100% completed. Equivalent units is what? 7,500 plus 2,500 into 50%. 1250. So 8,750. What is the total cost amount? 1,52,500 divided by 8,750. What about opening work in progress? You have not touched any opening work in progress. The value will remain the same. So closing WIP cost would be 22,000 plus how many units are uncompleted from the closing stock amount? 1,250 into whatever the rate you get, that would be the rate. Okay. So that is in terms of LIFO method. So question number 10 is joint cost along with the process costing. So let me read. A chemical company carries on production operation in two processes. The material first passed through process 1 where product A is produced. Following data are given for the month just ended. Material input quantity 2 lakhs. Opening WIP quantity 40,000 kgs, which 100% material is completed, 50% conversion. Work completed quantity 1,60,000. Closing work in process quantity 30. So obviously you should have, when it 2,40,000 is input, you got only 1,90,000 here. Material input cost is given, processing cost is given, opening WIP cost is given. Any quantity of product A can be sold for 1.6 per kg. Alternatively, it can be transferred to process 2 for further processing and then sold as product AX for 2 rupees per kg. Further materials are added in process 2, which yield 2 kgs of product AX for every kg of product A of process 1. Of the 1,60,000 kgs per month of work completed in process 1, 40,000 kgs are sold as product A and 1,20,000 kgs are passed through process 2 for sale as product AX. So one is further processed, one is sold as it is. Process 2 has facilities to handle up to 1,60,000 kgs of product A per month if required. The monthly costs incurred in process 2, which is of only which are further processed. Material cost 1,32,000, processing cost 1,20,000. As if 1,60,000 kgs are processed, this would be the cost. Determine using the weighted average cost method the cost per kg of product A in process 1 and value of both work completed and closing work in process for the month just ended. Is it worthwhile processing 1,20,000 kgs of product A further? Calculate the minimum acceptable selling price per kg. The potential buyer could be found for additional output of product AX that could be produced with remaining product A quantity. Now, let us go to, first we need to work out under average method what is the cost amount. So question number 10. See here. We are working under process weighted average method. Opening 40 units introduced 2 lakhs. Complete units 1,60,000 is complete because under weighted average method, whether it is complete units, whether it is from opening or from units introduced is not relevant. So which are completed means 100% completed. Normal loss, because Closing WAP, it says how much, how many units? 30,000 units, correct? See the question. Normal loss in quantity is estimated 20% of material input, right? What is a material input quantity? 2 lakhs. 2 lakhs in 20%, how much would be the normal loss? For normal loss, what is the percent of completion? 0, because this cost should be recovered from other. Closing is given. What would be the balance of abnormal loss? What is the percent to be taken for abnormal loss? 100%, 100%. Statement showing cost for each element, because when you're working under weighted average method, you are considering out of this 160 opening units are also there, right? For opening units, there is some completion for materials and processing cost, yes or no? When you took 100% here, and that is all I'm saying, you should also consider opening WAP cost under statement of cost for each unit. So cost incurred during the month. So total cost, what is the cost per each equivalent unit? 1.075. So value of complete units, 1,60,000 into 1.075, how much amount? 1,72,000. Closing WAP, you have worked out like this, right? How many units of closing work in progress? 30,000 and 67%, right? So 30,000 into material cost, how much amount? 0.475 plus 20,000 into 0.6, you will be getting 14,250 into 12,000. So total closing WAP 26,250. Evaluation of alternatives. If you sell product A after process 1, you're getting sales of 1,92,000, cost is 1,29,000, profit is 63. If you do further processing, you're getting a profit of 99,000. So which is better? Option B is better. So what is the minimum acceptable selling price of 40,000 kgs, sir? Further processing cost, what is incremental cost? In the question they are given, if you want to move from 1,20,000 kgs to 1,60,000 kgs, you should spend extra 44,000, right? Processing cost is also 20,000. Cost from process 1, what is the first? What is 1.075 into 40,000? Benefit foregone. What is the benefit foregone? Because in decision making, you should consider opportunity cost. As it been 40,000 units are sold at 40,000 units are sold at split off point, you would have sold for 1.6 rupees per kg, correct? Cost is what? 1.075. You are losing this benefit. That benefit I should recover from the new selling price. So total cost 1,28,000. 40,000 Ks of A will give 2 times of 80 AX. So what would be the total amount? 80,000. If minimum selling price is 1.6, you can further process this 40,000 and sell it as product AX. Okay. So don't get confused. 40,000 Ks of A would become 80,000 Ks of AX. Next one. XP Limited furnishes you the following information related to process 2. Opening WAP, how much amount? Nil. Units introduced 42,000 units at 12. Expenses debited to the process. Sir, units introduced is already opening raw material cost. Expense debited is 61,530. Labor 88,820. Come on, students. Overheads 1,76,400. Normal loss is 2% of input. 2% of 42,000. Closing WAP 12,000. Degree of completion, materials 100% completed for WAP. So if it is a complete unit, it assumes that 100% of material is completed, 100% of labor is completed, 100% of overheads is completed. Finished output 39,500 units. Degree of completion of abnormal loss, material 100, labor 80, overhead 60%. Units scrapped as normal loss were sold at 4.5. That is reduced from the cost of production. All the units of abnormal loss were sold at 9 per unit. That will be taken to P&L account. Determine the statement of equivalent production. Statement showing the cost of finished goods, abnormal loss and closing work in progress. Process 2 account and abnormal loss account. Now, question number 2, I'll explain from the solution. Question number 12. Now, see carefully. Because if I want to do the solution, it will take a lot of time. That is the reason I can explain more number of questions in this session. right? Opening, how much units introduced number? 42,000. How many units are completed? 39,500. Normal loss 2% of the input, 42,000 into 2%, 840. Closing WIP they are given 1200. The balance would be abnormal loss. How much is completed for material? Completed means 100% completed. Normal loss 0. Closing WIP 100%. Abnormal loss 100%. With respect to labor and overheads only, it is 50% and 40%. Many times you may consider labor and overheads in single column, but if the completion is different, you should consider in different column, different columns, and you should also find out statement for each cost of element separately. Statement showing cost for each element. So what is the units introduced? That is a part of material. Please highlight, this is very important. Units introduced is a part of material cost, because whatever the cost incurred in process 1 would be the raw material for the process 2. This is one I'm explaining in the initial part. What is the cost incurred during the month of March? 61,530. Realizable value of normal loss of reducing from the cost of production. Total costs, labor, overheads given. How many equivalent units you have divided? You have worked out cost per each equivalent unit. Second one, closing WIP cost means materials, how much is completed? Materials 1200 into materials 13.64, correct? So 1200 into 13.64 and labor 368 into 2.194, overheads 276 into this amount. So value of closing WIP, value of abnormal loss you can work out, and process A account you have worked out. So all debit. Completion, abnormal loss you'll be taking to P&L account, and anything amount realized from abnormal loss you're creating to abnormal loss account, balance will be transferred to costing P&L account. Okay. So this is problem number 14 is about inter-process profit. Pharma Limited produces product glucose G, which passes through 2 processes before it is completed and transferred to finished stock. The following data relates to March 2014. Opening stock, direct materials, direct wages, factory overheads, closing stock. Inter-process profit included in the opening stock is given. In process 1, opening stock is at cost only. Closing stock will be including in the profit. Output of process 1 is transferred to process 2 at 25% profit on the transfer price, whereas the output of process 2 is transferred to finished stock at 20% on the transfer price. The stocks in process are valued at prime cost. Prime cost means material, labor, expense. Finished stock is valued at the price at which it is received from process 2. Sales for the month is 28 lakhs. We are required to prepare process 1 account, process 2 account, finished stock account, showing the profit element at each stage. So please focus on this part, very important. All number 14, right? Right. Important point is this one. If profit is 25% on transfer price, for example, if a sales is 100, 25% is included. So what would be the cost amount? 75. What would be the profit on cost? 25 by 75. How much amount? 1/3. If 20% on transfer price, 100, 20, cost would be how much? 80. What is the percentage? 20 by 80 into 100. So 1/4. This is 25% on cost. Process 1, you're writing all the opening stock 1,50,000. So you need to write what is the cost amount and profit element separately, because when you're giving statement to other process, you'll give only total column. Cost and profit is to calculate what is the unrealized profit, because in AS2 it says that you should record your cost, you should record your inventory only at the cost. Okay. So even process one may transfer to process two at profit. They should understand how much profit is included because it is a responsibility of the overall finance department. So opening stock 1,50,000, no profit is included. Materials 3 lakhs, no profit is included. Diet wages 2,24,000, no profit is included. Closing stock also given 74,000. Fact prime cost is given. Overheads, this is the total processing cost. How much profit you said? Total output process one is transferred to process two, right? Other than closing stock, right? Because closing stock you already reduced. So this total cost is 8,10,000. 1/3 on cost 81,000 into 1/3. How much amount? 2,70,000. So this is the profit amount for process one. So you'll be transferring at 10,80,000. 8,10,000 would be profit. 2,70,000 is the unrealized profit. Right? Now come to process two. Important. From process to opening stock includes 30,000 profit, right? They said 30,000. What is process one transfer? 8,10,000 and 2,70,000 profit. The respective department, they will not include in profit. For example, I procure raw material for my own process. Will I include profit? No. So 3,15,000, 2,25,000. So closing stock you have reduced. Now see the closing stock. What is the closing stock? They said 90,000. What is the profit element here? So profit, see here, inter-process profit including opening stock is given. Closing stock is valued at what amount? Prime cost, correct? Now tell me, for 18 lakhs, cost is 15 lakhs, profit is how much amount? 3 lakhs. For 90,000, how much amount? 90,000 divided by 18 lakhs into 3 lakhs. So 90,000 divided by 18 lakhs into 3 lakhs. So how much you're getting? 15,000 profit is included. So overheads, process cost included. So how much is profit? 1/2 of 1/4 into, in process 2, it will transfer at 1/4 on cost. What is 1/4 on cost? Cost is 18 lakhs. 18 lakhs into 1/4 divided by 4. 4,50,000 is profit. So balance would be transferred to process 2 account. Now, final finished stock account. Opening stock, yes, profit is 1,65,000 is already included. Transfer from process to profit is included. For 27 lakhs, 18 lakhs is the cost and 9. Always remember, for this finished stock department, they always assume these are their cost. Overall finance knows how much profit is included in each process. So finished stock 24 lakh. So see here, how much is the finished stock? 2,25,000, right? Closing stock. So based on this valuation only, you have worked out this one. So the balance would be the finished stock, and you have sold for how much amount? 28 lakhs. So 3,25,000 profit. So overall profit is 11,50,000. So what is calculation of profit on sale? So what is realized and what is unrealized? How you got this 11,50,000? In process one, 2,70,000 profit, no profit on opening stock and closing stock. In process two, 4,50,000 is the profit. In 4,50,000, opening stock profit is 30,000, closing stock profit is how much? 15,000. Actual profit is how much amount? 4,65,000. In process three, what is the profit you got amount? 3,25,000. But what is the opening stock profit included? 1,65,000. Closing stock profit 75,000. Real profit is 4,15,000. How will you get real profit? For apparent profit, you need to add the opening stock and reduce the closing stock profit. So this is the, so here you need to identify at each level what is the cost and profit. So total overall profit you got 11,50,000, but this 11,50,000 is not of finished stock account. Process one profit is there 2,70,000. Process two, even though it is 4,50,000, actual profit is 4,65,000. Process three, even though you got 3,25,000 profit, but opening stock profit and closing stock profit, if I take it, it is 4,15,000. Okay. Important question for division number, please do it. Question number 16, yes. Fan costing with process costing. Remember, this is very important question. It is also given in the examination. Ex associates undertake to prepare income tax returns for individuals for a fees. Normally we assume process costing is for products, but this question process costing is for sales. They use the weighted average method and actual cost for the financial reporting purpose. However, for internal reporting, they use standard costing system. The standards based on equivalent performance have been established as follows. Labor per return is 5 hours at 240 per hour. Overhead per return is 5 hours at 20 rupees per hour. So every hour costs you 5 into 240 and 20 into 5. This is the standard cost. 1200 plus 100, 1300. For March 2015 performance, budget overheads is 98,000 for standard labor hours allowed. The following additional information pertains to March 2015 are given below. Opening returns in process. So normally we assume that process costing is for products. No, process costing is also for services. Returns started in the month of March 825. So total you have 1025. Closing is 125. So you would have completed 900 returns. There will be no abnormal loss and no normal loss. Opening cost data they have given, closing current period cost they have given. You are required to compute for each element equivalent units of performance and actual cost for each equivalent unit. Actual cost of return in process on 31st March, that is a closing WIP cost. Standard cost per return, which we already worked out 1300. The labor rate and efficiency variance as overhead volume variance and overhead expenditure variance. So please come to this problem number 16. See here, opening returns in process 200, introduced 825, closing 900, returns in process 125. 100% is because we are working under WIP method. If question is silent, please take a WIP method. Statement showing cost for each element, because it is a WIP, consider opening WIP cost. Okay, 12,000, 5,000. So during the month you have spent 1,78,000 and 90,000. I mean the question, the marathon material, it is not 1,78,000 is missing. Please write down this is 1,75,000. So 90,000 is cost. Okay. 78,000. 78. This is also examination question also, right? And 90,000. Next one. You have worked out cost for each equivalent unit. So standard cost per return, I already said 5 hours into 40 per hour. I think in the marathon material it is given 240 per, it is only 40 per hour. Okay. So 5 into 40, 200 plus 5 into 20, 100. So 300 would be the standard cost of return. So labor and overhead variances, efficiency rate variance is what? Standard rate minus actual rate. So here we need to consider the cost is incurred, labor cost is incurred for 950 units only, because 1000 units have completed. Out of this opening working progress, how much? 50 units, correct? So the actual cost incurred, $1,78,000 is for the current month cost, correct? So you need to work out based on that only. So 1,78,000 into 4,000 into 40 rupees, right? And labor efficiency variance, sir, even though you have completed 1000 units, how many units you have completed? 1000. But what is the cost incurred? The cost incurred is for the current products, current completion. Now, if you see here, 900 you have completed for labor. So the cost of 1,78,000, this is very important for calculating variances. That is the reason I said it's a combination of standard costing and 1,78,000 is a cost incurred in which month? March 31st. Now, when you're calculating efficiency or other variances, you should know what is the equivalent units. If you see here, what is the equivalent units? Sir, opening, how many units are there? Out of 200 units, 25% is already completed. How much is completed in the current month with current month cost? 150. How many are introduced in the period? 825. Out of this, 125 is not yet completed. 700 complete 100%. 700 100%. How much amount? 700. 125 is complete only how much percent? 80%. How much amount? 100. So 150 plus 700 plus 100. How much amount? 950. So this is important point in this question. So this is what I got, 950 rupees, 950 units. Okay. So your overhead absorption, absorbed overhead is also based on actual output. 950 into 5 hours into 20 rupees. Budget 98,000. So you need to work out volume variance. Expenditure 98,000. What is the budget overhead sum? Actual overheads is how much you have incurred? 90,000. So you have got volume variance and expenditure variance. Okay. Right. So in rate variance and efficiency variance also 4,000 hours you have completed, right? 4,000 hours. This is the 4,000 into 40 rupees minus what is actual cost? 1,78,000. Efficiency, actual hours is 4,000. Stand hours for which output? Actual output. Because when a cost is for 1,78,000, you should only consider the equivalent units only for 1,78,000. So 950 into 5. So this is very important part in terms of standard costing. 950 units. Okay. So remaining all are same. So here process costing, other than process costing, most important is the standard costing and variance analysis, because you know how to calculate weighted average method, you know how to calculate statement of cost for each element. But when you're calculating standard cost also given directly, variances, you should work out for actual output. When the amount is spent is 1,78,000 and 98,000, that is for what? That is the amount incurred in the month of March. That means you should also consider what is the output produced in the month of March. So output is that, so with 1,78,000 and with 1,78,000 and 90,000, which is overheads and labor, what did how I use this 1,78,000 for opening uncompleted 75%, current year full complete 100%, current year uncompleted 80%. So actual output should equal to how much amount? 950 units. So based on this 950 units only, should calculate labor variance and overhead variances. Okay. So this is one of the very important question. If they wanted to ask you to compare, to give a consolidated question on standard costing and process costing, this is one of the important question. So the point is that, important point is that statement of equivalent units, statement of cost for each unit under FIFO method and average method. FIFO method, so in cost you don't consider opening value, in equivalent units also you not consider. FIFO method, you can in under weighted average method, you will consider the cost here, you will consider the units also there. Inter-process profits I've explained. A question which is combination of standard costing and process costing is also explained. Okay, so we'll move to the last problematic chapter, overheads, and last is the theory part of introduction to cost and management. Hope you have understood, and please revise it. Very good morning, students. Hope you have listened to all of the earlier chapters. We are moving into 13th chapter. My intention of Mardhan is not discussing a few chapters. I want to discuss all chapters, the important topics. That is the reason I'm covering 15 chapters of our syllabus with respect to CA Inter paper 3. The next chapter we are discussing about joint products and byproducts. This is also an important chapter, and minimum marks we are expecting is 10 marks from this chapter. Okay, so that is a joint products and byproducts. Yes, here we need to learn a little bit of theory, and problems are also a little bit lengthy. You need to read the question properly, understand the question properly, and then you need to do the solution. Okay. Now, let me take to our material. Now, joint products and byproducts. Sir, joint product is that where raw material is one, at some point of time, you are getting more than one product from the same type of raw material. That is we call as joint products. The basic example is that is crude oil. From the crude oil at different temperatures, you'll be getting MS, which is petrol, diesel, gasoline, sulfur, you'll be getting gas, etc., etc. So those we call as joint products. Here, if you, what is the major problem with the joint products and byproduct is that cost is incurred for common expenditure. Like crude oil, you are incurring, all other manufacturing expense incurring. But products is more than one cost object, like petrol, diesel, etc. How to apportion the joint cost to these products? That is the major topic in terms of joint products and byproducts. Now, what is byproduct? Byproduct is incidental to the manufacturing process. Like, for example, normally it is not of significant value. In some cases, it would be a significant value. Like in terms of sugar industry, so you'll be getting molasses as a byproduct. Okay, so byproducts, the difference between joint products and byproducts is the joint products more or less will be having same value, whereas petrol, diesel will be having significant value, right? Whereas in terms of byproduct is less value, and whereas main product would be the costly item. So that is a major difference between joint products and byproducts. The important point we need to understand is the split off point, because all the raw materials at some point of time, they will be processed. See the joint product nature. So you are incurring joint cost. At some point of time, the products will emerge. Now, what is split off point? Split off point is that stage in the manufacturing process where joint products are separately identifiable. Now, for example, let us assume there is one split off point, like take an example of crude oil. At different temperatures, you will be getting different products. Let us assume at somewhere about 400 degrees Celsius, you are getting MS, HSG and other products. This point is called what? Split off point. The important point in terms of joint cost and byproducts are up to split off point, the costs are cannot be traced to each cost object separately, because the cost you will incur in total up to split off point. After split off point, if it is any further processing, those costs can be identifiable separately. But up to split off point, for example, I am incurring cost on crude oil. So out of this crude oil, how much you'll get from petrol, how much you'll get it for diesel, how much you'll get it for lubricants, you'll not get identified up to split off point. So that stage is called what? A split off point. The main crux of this chapter is that how to apportion the joint cost which are incurred up to split off point. After split off point, any cost incurred you can identify separately. The reason is that after split off point, product is identifiable. Any extra cost you are incurring to respect to product, which are identifiable, which are traceable. But in case of joint cost you are incurring for all the joint products, apportioning the cost, because if we do not apportion the cost, we cannot able to identify what is the profit from each product. That is the reason the joint cost and byproducts. Joint products and byproducts is an important topic with respect to joint products industry. Now, prior to the split off point, products are not subject to identification. After split off point, products are subject to identification. You can identify. Remember this important one. Up to split off point, the cost incurred is joint cost, which are not traceable to each cost object. After split off point, this is called separable cost, which are identifiable against each product. Important point is how to apportion these joint costs. That is a point in this question, okay, in this chapter. Now, there are many methods of apportionment of joint cost. So few methods I'll explain here itself. So we have 6 methods. So we'll go in first one, physical quantities method or units method. So what we do under physical quantities methods and units method is that total costs incurred up to joint production process are allocated to various products in proportion to physical measurement. Let us assume I've incurred joint cost of 1 lakh. Now products like you have produced 3 joint products, A 5,000, B 10,000, C 20,000. So you allocate this joint cost of 1 lakh based on this physical unit 1:2, 2:4. That is a physical units method. Okay. Now, this method cannot be applied if the physical units of the 2 joint products are different. Now, for example, A I am measuring in liters, B I am measuring in some gallons, from kgs. Now, if the measurement is of not same, it is difficult to apportion under physical quantities method. Now, what is average unit cost method? Total process cost, that is up to separation, that is split off cost, you will be divided by all the quantities of joint products. You are finding out average cost. You will find out what average cost. That average cost you will apply to respective products. For example, total cost is 1 lakh. Total units produced is 20,000. How much amount? 5 rupees. Now, what is average cost? 5. For A, 2,000 units into 5. So based on average cost, you will apportion the joint cost under average unit cost method. Next one, survey method. The survey method is not of costing. This is based on a surveyor. Now what happens is that based on the technical evaluation, it says that, okay, if I incur 100 rupees, A will occupy 40%, B will occupy 20%, C will occupy 30%, D will occupy 10%. So based on this technical survey, if you apportion the cost, that is we call as what survey method. Understood? Now, next one, contribution margin method. Here what happens is contribution margin method. Here you are bifurcating all the joint costs into variable and fixed. You are segregating all joint costs into variable and fixed cost. Now what we'll do, variable costs are apportioned over joint products on the number of units produced or on based of physical quantities. Now let us assume you are supposed to work out what is the sales. The variable costs are apportioned over the joint products on the base of units produced or physical quantities. In case the products are further processed after the point of separation, then all variable costs incurred to be added to the variable cost determined earlier. Contribution is ascertained after deducting the variable cost from sales. The fixed costs are apportioned based on the contribution ratios. That means joint cost bifurcating to variable and fixed. Separable cost, that is after point of separation, identify variable cost and fixed cost. Now consider these two variable costs, sales minus variable cost. While you get contribution, you know PV ratios, different products A, B, C, you find out the contribution. Based on these ratios, you need to apportion this fixed cost. So that is a contribution margin method. Clear? Right. Next one, market value method. It is at the point of separation after market value after processing. NRV method. NRV method is most important in terms of examination. Now, market value method is of some logical method because It's considered that the market value of the joint products or market value of the final product. Now, market value at the point of separation. Sir, what happens here? Joint costs are apportioned based on the market value of the products which are arrived at split off point. Now, for example, at a split off point, you are getting three products A, B, C, 20K units, 30K units, 40K units. You find out this market value. Respective, find out the market value. Based on this ratio, you apportion the joint cost. That is called market value at the point of separation. Now, see carefully. The important problem or the difficulty here, identifying the market value at the point of separation, because there are some products which need the market value will arrive only after further processing. So in such a case, this method cannot be applicable. Okay, cannot be applied. Next one. Market value after processing. The basis of apportionment of joint cost is the total sales value of finished products. Involves the same principles as discussed in point number A. Here what happens is that you are finding out the market values of the final product. Based on the market values of the final product, you will apportion the joint cost. First one is the market values at the split off point. Second one is the market values after processing. Third one is NRV method. Here you are apportioning the joint cost based on NRV, because when you are unable to find out the market values at split off point, you can use the NRV method. What is NRV method? Let us assume there are three joint products. You find out the final sales price. Next one, from the sales price, you reduce your profit margin. You reduce your after post separation cost. You reduce our selling and distribution. You are arriving the NRV of the product at split off point. That means if I want to sell this product, this would be the amount which I am getting realizable. Clear? No, because let us assume at split off point 100 rupees cost. Now what would be the sales value of this? I don't know market value. As if the product is final process, you could have sold for 150, profit margin 10, post split of cost somewhere about 10, selling and distribution 1. So what would be the NRV of 125? If this 100 rupees is further processed, the value of this product at split off point would be 125. That is NRV method. So based on NRV method, if you apportion the joint cost, that is we call as net realizable value method. Very important for examination. How will you find out the NRV method? Final sales value less post profit margin, post split off cost, and you reduce the selling and distribution expense. You will be arriving the, you will arrive at what? You will be arriving the NRV at split off point. If you apportion NRV at split off point, that is a net realizable value method. Clear? This is very important in the examination also. Next one, constant gross margin method or percentage of NRV method. Here what we are supposed to do is that you need to work out, assuming the gross margin of all the products would be the same, and you are applying that gross margin at split off point. So this method is based on the fundamental axiom that profits are earned on total cost incurred, but not on the joint cost. Now, what are the steps to apply this one? First, you need to work out the gross margin for each product. How will you arrive gross margin? Gross margin final sales value of the total production, final sales value of total production less, you should reduce joint cost and separable cost. You are getting gross margin because the assumption in gross margin is that the profits comes not because of joint cost, profits will come based on the total cost. You work out the gross margin. You take the total sales value of all the joint cost, you find out the gross margin, what is the percentage of gross margin. Then from gross margin, subtract the sum of separable cost and gross margin from market value of each product. The amount would be allocated joint cost corresponding to each product. Now what you need to do is that take the final sales value, reduce the gross margin, reduce the separable cost, you will get the joint cost to be apportioned. Because joint cost, separable cost plus gross margin would be the final sales value. From final sales value, if I reduce gross margin, if I reduce support cost, what would be the balance amount? Balance would be the joint cost. So this is the constant gross margin percent NRV method. The point to be remembered here is that important concepts with respect to this chapter is constant gross margin NRV method and net realizable value method. If question is silent about method of allocation, apportionment, please go ahead with the net realizable value method. Clear? Now, how to methods of apportioning joint cost over the byproducts. Till now, what we discussed is about joint products. Now we are discussing about joint cost over the byproducts. Now, if market value and realization, the byproduct value is of small value. So here, first one you can go with market value, second with the standard cost, comparative price and reuse basis. Treatment of byproduct in the cost accounting is very important. When the byproduct value is of small value, you can do two things. You can take that credit to statement of profit and loss account, or you can reduce it from the cost of production. If you remember, even on cost sheet, we have reduced the byproducts value, right? When they are of small value. When they are of considerable value, please consider byproduct as joint product. That means when the byproducts are of considerable realized value, normally what we understood, there will be one joint product and one byproduct. If this is of significant value, assume these two are joint products and apportion based on respective methods, either case of physical units method or average cost method or market value method or NRV method or constant gross margin method. This is when the byproducts doesn't require further processing. If byproducts requires further processing, see carefully. If byproducts require further processing, if after further processing, if the amount is small, if the total sales value of byproducts at split off point is small, then what we need to do, you need to treat it as a small value. If the byproducts after further processing is considerable, please consider like this. Simple. So simple understanding is that byproducts, if it is of small value, further processing or before further processing, if small value, take into costing P&L account, or you can reduce from cost of production. Or if there are significant value, assume the byproduct as a joint product and apportion based on respective methods. That is a treatment of byproduct cost in the cost accounts. Right? So this is all about theory part of joint products and byproducts. Now let me move to the questions. Chapter number 13, joint products and byproducts. Here I'll try to explain the questions, because you can do the answers easily because it is available in our solutions also. Because understanding the question, reading the question is very important with respect to joint products and byproducts. Okay. In a chemical manufacturing company, three products A, B, and C emerged at a single split off stage in department B. Single split off stage means A, B, C are joint products. Product A is further processed in department Q. So in department Q, A is further processed. In department R, B is further processed. In department S, C is further processed. There is no loss in further processing of any of the three products. The cost data for month are as under. Raw material introduced in department P, 12,68,000. So this is a joint cost which is to be apportioned between product A, B, and C. Direct wages department. So 3,84,000 is also a joint cost, because in department P, understand this is very important. Department P is the initial stage where split off point is happened. Any cost incurred up to split off point is a joint cost. So your joint cost is 12,68,800 plus 3,84,000. What about Q? This is a separable cost of A, that is post split off cost. What is R, B? What is S, C? So this is the 3. Now what would be the joint cost? Joint cost would be 12,68,800 plus 3,84,000. Factory overheads of 4,60,000 are to be apportioned to the department on direct wages basis. That means factory overheads of 4,64,000 to be apportioned between these ratio. If we add these 3,84,000 plus 96,000, plus 64,000 plus 36,000. Based on this ratio, you need to apportion 4,60,000. So joint cost includes 12,68,000, 3,84,000 plus apportionment of this 4,64,000, which is for department P. This would be the joint cost. Post split of cost will include for product A, which is incurred in department Q, this wages plus overheads. 64,000 plus overheads, 36,000 plus overheads. Clear? Now, during the month under reference, the company sold all the three products after processing them further as under. Output sold. So each product after further processing, you have sold at 32, 24, and 16. There are no opening closing stock if these products were sold at split off stage, that is without further processing. The selling prices would have been 20, 22, 10. What is this one? Sales value after further processing. It is sales value at split off point. Required prepare a statement showing the apportionment of joint cost to joint products under any method, right? Prepare a statement showing the product wise and total profit for the month under reference as per the company's current processing policy. What is a pricing decision should have been taken to improve the profitability of the company? Calculate the product wise and total profit arising from your recommendation in point number 3 above. If question is silent, please apportion joint cost based on NRV method or market value at split off point method. Now NRV, final sales value, we do not know what is the selling prices and we do not know the selling and distribution expense and profit. So we'll be going with market value at split off point method. Now we need to work out first the joint cost. See, a joint cost includes what amount? Which is raw material, direct wages, factored allocation. This is the joint cost of 19,60,000. This is the further processing cost of A. This is further processing of B. This is further processing of C. Now, you are working out market value at split off point. There is no loss, right? So, what about the final product? That is the product arrived even at the split off point. Okay. Now, statement showing product wise and total profit based on recommendation. So you are getting final product. Now you need to understand that whether doing further processing, if I'm getting incremental profit, I'll go with further processing. Otherwise, what I'll do, I'll sell the product at split off point. Now, if the product is sold at split off point, product A, profit is how much amount? 3,55,000. See, profit after further processing, profit are getting, sorry. So product A are getting profit at 3,55,000. See how much amount? 55,200. Now you need to take a decision what to be done to increase the profitability. Now, the product B after further processing is in incremental loss. How? Product B, what is sales value? 8,80,000. Joint cost how much amount? 8,80,000. If you incur further processing cost, your profit would be reduced or you will be having loss. Whereas product A and product C, you are getting profit after further processing. Please go ahead. Product B, you need to sell at the split off point. So this is the question in terms of this. Right? Next one. Problem number 4. Porkman Chocolates manufactures and distributes chocolate products. It purchases cocoa beans and processes them into 2 intermediate products: chocolate powder liquor base, milk chocolate liquor base. This question is also easy, but terms makes confusing. So you should be very careful with reading the question itself. So if it is a 1 page in our question, means in the examination they would have given in 3 pages. You'll get frightened. Why? Okay, 3 pages question is given. So don't worry. The size would be higher and the spacing would be higher in terms of examination paper. He purchased cocoa beans and processed them into 2 intermediate products: chocolate powder liquor base, milk chocolate liquor base. These 2 intermediate products become separately identified as at a single split off point. Every 500 pounds of cocoa beans yields 20 gallons of chocolate powder liquor base and 30 gallons of milk chocolate liquor base. Now, the chocolate powder liquor base is further processed into chocolate powder. So first you need to write down cocoa beans into chocolate powder liquor base, milk chocolate liquor base, and this is into chocolate powder, this into milk chocolate. Now, every 500 pounds, you're getting 20 gallons and 30 gallons. Every 20 gallons will give you 200 pounds and 30 gallons will give you 340 pounds. Production and sales data for October 2015 are as follows. Cost of cocoa beans process 7,500. Tell me every 500 will give you 20, 30. 7,500 means how many times? 7,500 divided by 500, which is 15 times. So 15 into 20, how much you would get? 300. So if it is 7,500, 20 times 300, this is 15 times 450. Now, every 20, you are getting 200. Every 300, you would have got 3,000. Every 30, you are getting 340. 340 divided by 30 into 450. 340 divided by 30 into 450. You will be getting 5,000. Correct? So 30 gallons, 340. Now how many gallons? 450 gallons, right? So 340 divided by 30 into 450 gallons. Somewhere over 5,100. Right? Next one. Production, those. So we have worked out a lot, but in the question only they are given. Chocolate powder 3,000 pounds, milk chocolate 5,100 pounds. Sales also same. Selling price they are given. The October 2015 separable cost of processing chocolate powder into liquor base are 3,02,008. This is a further split of cost. Further processing cost. Whereas milk chocolate liquor base 6,23,437.5. Pokemon full process both of its intermediate products into chocolate powder or milk chocolate. There is an active market for these intermediate products also. That means you can sell the products even at the split off point. The Pokemon could have sold the chocolate powder liquor base at 997.5. That means they can sell 300 at 997.5 and 450 at 1235. Required. Calculate how the joint cost of 7,12,500 would be allocated between chocolate powder and milk chocolate liquor base. Sales value at split off point. Sales value at split off point is 997 and 1235. Physical measure based on gallons. Estimated NRV. NRV method, how will you get final sales value minus further processing cost, less selling and distribution, less profits. Constant gross margin method. What is the gross margin percentage under requirements of each one above? Could Pokemon have increased its operating income by changing its decision to fully process both of its intermediate products? Show your computation. Simple question. Question number 4, right? See here. If you are working based on sales value at split off point, so this is the sales value at split off point. So this is apportionment of joint cost. Physical units method means 300, 450. Correct? Now, if it is NRV, final sales value less further processing cost, you are getting NRV. So apportionment of joint cost. So one column is missing, Amma. You can use the same one. Constant gross margin. You should find out the total sales value. Find out the total cost. You are getting gross margin. This 8% margin you should apply like this. Final sales value less gross margin less further processing cost. You will be getting the joint cost. because you should get directly 7,12,500. Now gross margin under different method. Gross margin, now will you get sales after processing less joint cost, separable cost. You are working out gross margin. Gross margin by sales after processing, you'll get the gross margin under different method. If it is a gross margin percentage method, it would be same for both. See here it is 8%, here it is 8%. So incremental loss or chocolate powder. Sir, incremental loss for chocolate powder is 32,000. Incremental profit for milk chocolate is positive. That means what we should do, chocolate powder you should sell at split off point. Milk chocolate you should further process and sell it off. You'll get your profit will increase by 32,062, or your loss would have been decreased by 32,062. Correct? Yes. So question number 5 is also same. You can just work it out more. Now come to question number 9. A company manufactures one main product and two byproducts, B1 and B2. For the month of January 2013, the following details are available. The total cost up to separation point, 2,12,400. M1 is main product, B1, B2 are byproducts. Now, selling price 100, 40, 30. Estimated net profit as a percentage of sales value. Estimated selling expense as a percentage of sales value. So from this sales value, if you reduce these two, you'll get the NRV of the byproducts. Correct? Now, there is no beginning or closing. Prepare a statement showing allocation of joint cost and product-wise and overall profit of the company for January 2016. This is question number 9, right? So that is the reason I wanted to cover both joint products along with the byproducts also. Okay. Now, so in terms of question number 9, we have B1 and B2, which are byproducts. Final sales value, from that the net profit 20%, I think it's given. Sorry, that 20% and the B2 30% is given. And selling expense also they are given. What is the percent amount? 15% and 15%. So cost of production you have arrived. Cost after separation. What is the further processing cost amount? 35,000 and 94,000. So this would be the joint products. Now, if it is a small value, out of the total joint cost of 2,12,400, we'll reduce these two. The balance should be allocated to M1. So 11,800, 25,500 we'll use for B1 and B2. Cost after separation, selling expense, you are getting the final overall profit. So this is the joint cost. So when it is of small value, if it is of significant value, we'll assume M1, B1, B2 as a joint cost. You'll apportion a joint cost under joint cost methods. If the byproducts of less value, how will you find out the NRV of each product? So from sales value, if you reduce net profit, selling expense, and cost after separation, further processing cost. So you are allocating based on joint cost. So if NRV is less, NRV is, we have discussed, right? NRV is not significant. Reduce this cost from the total cost of production. What is the total cost of production? 2,12,400. Out of that, you reduce 11,800 and 25,500. So you are getting the profit. So overall profit would be 1,86,300. So this is the allocation of joint cost. If the NRV is considerable value, treat M1, B1, B2 as the joint cost, not as byproducts. Okay, right. Now, problem number 10. A factory producing article A also requires a byproduct B, which is further processed into finished product. A factory producing article A also produces byproduct B, which is further processed into finished product. The joint cost of manufacture is given below. Subsequent costs are also given. That is a further processing cost. Selling price of A is 16,000, B 8,000. estimated profit on selling price is 25% for A, 20% for B. Assuming that selling and distribution expense are in proportion of sales prices. State how would you apportion joint cost of manufacture and prepare a statement showing cost of production between A and B. Now let us move to question number 10. Now first we need to work out what is selling and distribution. What is total sales value among 16 plus 8 because of considerable value. So total value is 24,000. Estimated profit. What is estimated profit? 25% on selling price, 20% for B. So cost of sales 18,400. Joint cost how much amount? 10,000. Subsequent cost 8,000. Selling and distribution expense balance would be 400. This 400 should be apportioned based on the sales value. Apportionment of joint cost. Now total sales value 16,000, 8,000. Estimated profit we are reduced. We have worked out the NRV. Based on NRV method, we are apportioning between article A and article B, which is total 10,000. Now, statement of cost of production of A and B, joint cost, material, labor, overheads, because these are treated as, because both are considered, these two are byproducts are treated as what amount? Joint products. Subsequent allocated and total cost of profit A and B is given. If you reduce it from the sales, you'll get the profit, because joint cost and B byproduct is of significant value, byproduct is of significant value, then treat both A and B as what amount? Joint products. So first you need to work out what, because if you add all the expense, you should get the sales value. But here balancing figure is, what is a balancing figure? Balancing figure is the selling and distribution expense. Apportionment of joint cost. Now after finding out the sales, you reduce the profit, selling and distribution expense. This is how you need to calculate NRV, right? And subsequent cost. Now obviously you will get 10,000, which is joint cost. You allocate between A and B in this way, and subsequent cost is given directly. You reduce, find out the total cost from the, if you reduce it 11,733, 6,266.67, then you'll be arriving at the, for this 11,733.33, 6,266.67. If you add the selling and distribution expense, it will be somewhere 12,000 and 7,400. If you reduce from sales value, you are arriving at the profit numbers. So this is one of the important topic in there which they can ask you in terms of examination. So problem number 9, where byproducts are of insignificant value, that is reduced, the cost of B1 B2 is reduced from the main product. Problem number 10, A and B is of significant value. We are assuming for article A and B, they are given, right? So product A is main article, product B is byproduct, but both are significant. Assuming both are as joint cost, we have apportioned the joint cost. Clear? And if you see other questions also, very beautiful questions in terms of our material. We have covered first question, different methods. So question number 2 is also important. Here you need to apportion between sales value, physical measure method, NRV method. NRV method very important. Final sales value less profit margin less further split of cost less selling and distribution expense. So the decision making is also important, sir. Whether sales at split off point is profitable or sales at after further processing is profitable. You need to work out incremental profit. What is the value I'm getting after further processing? What is the cost I'm incurring? Incremental cost. Whether if my incremental profit is positive, please go ahead of further processing. If my incremental profit is less, please select the split off point. Question number 4 you have discussed. Question number 5, just you can work out. This is the question. Whether you need to sell at the split off point, whether you need to sell that after further processing. So incremental profit we would have worked out. Question number 5, I'll show the solution also. See here. In case of M, what are we saying? Do further processing and sell. N, you sell, please sell at split off point only, because you are getting incremental loss as negative. So only M should be further processed. N and P should be sold at split off point. So next one, sixth question also you can discuss same concept. When it is opening stock and closing stock, how to calculate the, how to apportion the joint. There is no opening, but there is a closing stock. So sixth question also, please look after. See here, for cost of goods sold available for sale, you should reduce the closing stock value. Based on this number, you should, then you should arrive at the cost of goods sold. Based on that only, you need to work out the value. Okay. So this is worked out percentage of closing stock among the total production cost. So this is one important question which you are supposed to look after. 7, 8, this is all of decision making. 9 and 10 also you have discussed. So joint products and byproducts is very important chapter. You should have a patience of reading the question. So the words may get confused. So you should write a proper stepwise. Then this chapter would be easy for you. Okay. And theory part, different methods, please read it off and understand what is. And in terms of byproducts, if it is significant value or insignificant value, treatment would be different. Insignificant, reduce it from the joint cost. If it is significant, please treat it as joint products. Okay. Even if it is a byproduct, treat it as joint product. So this is the end of joint products and byproducts. We'll meet with the next chapter of overheads. Okay. Very good morning, students. Please welcome to CA Inter Costing Marathon session. So we are at the end of the marathon session discussing the last problematic chapter, overheads. The next chapter is about theory topics of introduction to cost and management accounting. Now, overheads, yes, very important chapter. Many students, yes, overheads is important chapter, tough chapter, because maybe not only overheads, even in terms of your fixed cost, standard costing and variance analysis also, you'll feel difficult in terms of fixed overhead variance. But now you might have learned the fixed overhead cost variance in a logical way, or you can also refer to our YouTube videos about the fixed overhead cost variance. So before I start, students, I hope you have listened in a proper way from first chapter to up to now. You have referred our material, icai material. I hope, I am wishing you all the best in terms of your examinations. May you be fly in colors with a good amount of marks, but be confident and do well. In terms of overheads, so few topics which I cannot cover total syllabus in an hour. What is important only I'll cover, and I try to give you the maximum information about overheads. Indirect material, indirect labor, indirect expense put together we called as what? Overheads. The nature of overheads is that overheads cannot be estimated precisely before starting of any production, because overhead, over the burden, these days overheads only literally contributing major part of the cost of an organization. In terms of overheads, we need to understand few important topics like allocation, apportionment, reapportionment, absorption. Four important things: allocation, apportionment, reapportionment, and absorption. You should also know by this time what is cost object, what is cost center also. And in terms of cost centers, you will be having two types of cost centers: production cost centers and service cost centers. Now, overheads are, how overheads are absorbed by using a predetermined rate, budget overheads divided by budget output or budget hours, etc., etc. How to calculate this absorption rate? That is only the major part of this overhead chapter. Now, here overheads are allocated. First, chance is allocated. allocated to cost centers. Which cost centers are? Production cost centers as well as service cost centers. So one minute, let me open the notes. First, we need to do allocation, then apportionment, then reapportionment, then absorption. Absorption, if you remember, how will you arrive the absorbed fixed overhead or standard recovery rate? Budget fixed overhead divided by budget hours or budget output. Okay. Now, when allocation is done, sir, when a particular cost or particular overhead, this is all we are discussing about overheads. That is indirect material, indirect labor, indirect expense. If it is direct material, direct labor, direct expense, no need to worry. We should not even allocate or apportion the direct cost. Allocation is possible when a particular cost is traced to a particular cost center. Now, for example, we have a rent called overhead. If you know exactly, let us assume we have production cost centers 1, 2, 3, service cost centers A, B, and B. When you know how much you are paying exactly for this 1, 2, 3, and A and B, then you are supposed to do allocation. Because we need to arrive at this budget fixed overheads, right? Budget overheads or budget fixed overhead. If allocation is not possible, for example, you are paying only one rent for all these 5, allocation cannot be done. In such a case, we do reapportionment on some suitable basis. You might have learned what is some suitable like electricity based on kilowatt hours. Okay, like mission hours, mission cost like based on mission hours, indirect labor based on direct labor. So this all you might have learned in the overhead chapter. Clear? Right. Now, allocation apportionment will be done both for production cost centers and service cost centers. Now tell me, ultimately, I need to recover my overheads amount only from where production cost centers, because service cost centers are only providing services to production cost centers. I cannot recover from, because service cost centers are providing service to production cost centers. Ultimately, the cost of service cost centers should also be recovered from where primary cost centers. Now, reallocating for example, you might have got some amount by doing allocation and apportionment. Now, you got some amount here, let us assume X, here Y. X amount you can recover it from the products because it is only producing. Service cost centers, they cannot recover money from outside. They should recover only from where production cost centers. Now these cost centers are providing services to whom? To production cost centers. The reapportionment of service cost center overheads to production cost centers is called secondary distribution of overhead. So primary distribution is this one. Allocation and apportionment you'll get under primary distribution. If reapportioning the service cost center data to production cost centers is called what? Secondary distribution of overhead. Now, how the secondary distribution of overheads can be done under many methods. That is only the first part of your overhead chapter. Trial and error method, algebraic equation method, so repeated services method, etc., etc. Now, what methods, sir? Let me share our material for that also. Because I wanted to cover, because many students feel difficult in understanding overheads because they're lacking the knowledge on overheads. Okay, right. Now, so for estimation of overheads, first we do allocation. Then what we do, apportionment and reapportionment of overhead, because allocation apportionment is done both for production department as well as what service departments. Now, reapportionment of overheads to whom, from service cost centers to production cost centers, under which methods? Methods of reapportionment are, we have direct redistribution method, step method, and reciprocal service method. Now, in terms of methods of redistribution, direct redistribution method, step method is completed. Under reciprocal service method, we have three more methods: simultaneous equation method, trial and error method, repeated distribution method. So these two, where service cost centers are providing services only to production cost centers, but reciprocal service method considers services to production cost centers as well as service centers. So in such a case, we should move to simultaneous equation method, trial and error method, or repeated distribution method. Majority of time, they may ask you question on the simultaneous equation method or repeated distribution method. Trial and error method is also same. So instead of going with calculation, you go on try numbers. Where it matches, you can go ahead. Okay. So understood. Allocation apportionment is done under primary distribution of overheads. Service cost centers amount is again reapportioned to what? When I say amount means overheads. And service cost centers amount is again reapportioned to primary production cost centers. That system is called secondary distribution of overheads. What are the methods of reapportionment? That is a secondary distribution or reapportion. Under direct redistribution method, step method, reciprocal service method. Under reciprocal means one service cost center is providing services to production cost centers as well as another service cost center. For example, canteen is a service cost center. Okay, accounting is another service cost center. Assume that it is providing services to production cost centers as well as the accounting. So when the mutual services between service cost centers and production cost centers, then we need to apply reciprocal service method under simultaneous equation method, trial and error method, or repeated distribution method. Now, after, what are the methods of absorbing overheads to various products or jobs? You can go based on percentage of direct materials, percentage as a percentage of prime cost, percentage of direct labor cost, labor hour rate, mission hour rate, rate per unit of output, per unit, per hour, per labor hour. Majority times we try to use these two. If it is a labor intensive industry, we follow labor hour rate. If it is a mission hour rate, it is mission. If it is a mission intensive or automated industry, we try to follow mission hour rate. Okay. Now, how to calculate mission hour rate set? The steps involved in determining the mission hour rate is as follows. Calculate the total overheads apportioned to a production department. Apportion further these overheads to missions or group of missions in the department. Allocate mission specific cost directly identified with the mission. Estimate the total productive hours of the mission. Aggregate overheads as apportioned in step number 2. So when allocation apportionment both is supposed to be divided by estimated product hours, because we are finding out absorption rate. Absorption rate is based on budget overheads divided by budget output, because we cannot estimate prior what is overheads amount. Clear, right? Now, then you'll get the mission hour rate. So that is a concept of mission hour rate. There are different types of, because 1-2 tier mission hour rate. So majority part is, first one is in, if you see the total overheads chapter, first part is primary distribution, secondary distribution of overheads under different methods. Second part is calculation of mission hour rate. Third one is to find out disposition of under absorption or over absorption of overheads, and few important theory concepts. That is the overhead chapter. What are the types of overhead rates? Normal rate. This rate is calculated by dividing the actual overheads by actual base. It is also known as what actual rate. Predetermined overhead, that is what we applied in standard cost. So when you find out the rate in advance by estimating the budget overheads and budget amount, that is called predetermined overhead rate. Blanket overhead rate, when a single overhead recovery rate is there, when a single overhead recovery rate is there throughout the organization, that is called blanket overhead rate. That is what we have discussed, the difference in terms of ABC versus traditional costing. Because traditional costing is volume based methods. So volume based methods, whereas ABC is resource consumption based method. Because if I say overheads in the beginning of the chapter, you don't know where did you get all these numbers. That is the reason I'm waiting overheads to be at the end of the topic. Then you have departmental overhead rate. So for the whole one department, if you have blanket overhead rate means for the whole factory, departmental overhead rate is the single rate for each department. Okay. Now, treatment of under absorption or over absorption overheads. Now you can understand what is under absorption or over absorption when you listen to cost accounting system, correct? Because in cost accounting system, when you're drawing the factory rate control account, what is on debit side? Incurred. What is on credit side? Absorbed. Absorbed into what? Cost of production. Now, when absorption is more, it is called over absorption. When absorption is less, under absorption. Now, we are not discussing what we are discussing on treatment of over absorption or under absorption of overheads. Is there any under absorption or over absorption of overhead? Yes. If the absorption amount is small, charge it to costing P&L. Simple. If absorption is due to wrong estimation and abnormal reasons, yes, then also charge it to costing P&L account. If the amount is small and if it is because of abnormal reasons, please charge it to costing P&L. Other than that, you need to calculate a supplementary rate. That means whatever the under absorption or over absorption amount should be apportioned between cost of sales, WIP, finished goods account. Because whatever you have produced throughout the period, either it would have been sold, either it would be there in the work in progress, either it would be there in the finished good. So that is the reason under absorption or over absorption of overheads. If it is small, please take it to P&L account. If it is due to abnormal reasons, please take it to P&L. Other than that, by using a supplement rate, charge between, using supplement rate means what? Whatever the total amount of overhead should be apportioned between these ratio. For that, they may ask you to, for example, cost of sales is 100 units, work in progress 10, equivalent units, finished goods 50, how much 160, total amount somewhere about 16,000, 100 rupees supplement rate. How much is for cost of sales? 100 into 160. So 100 into 100, 10,000, 1,000, 5,000. Or you can do directly 16,000 in the ratio of 100 is to 10 is to 50. Then also you'll get same amount. So don't get confused with the supplementary rate. Okay. Next, concepts related to with capacity. Because the overheads are recovered based on normal capacity, it's a fixed overhead. Whereas variable overheads are recovered based on actual capacity. Installed capacity or rated capacity is the maximum capacity because it is important for 5 marks question. The maximum capacity of producing goods or providing services, it is also known as theoretical capacity because majority times, for example, if you see some bikes, 110 kmpl star mark includes many. So that is we call as rated capacity. You may say that you should not have any brakes, you should not have any traffic. In such a case, you'll get a mileage. Not possible in a day-to-day circumstances, right? Practical capacity. It is defined as actually utilized capacity of a plant. It is also known as operating capacity. So to the extent the plant can operate, that is called practical capacity. Normal capacity is taken into account on average basis. Maybe last 3 years, what is the actual capacity you are using? By reducing the capacity resulting from planned maintenance. So average of 1 to 3 years, you can take it off. less plant maintenance would be the normal capacity. Actual capacity means what is actually achieved during the period. Idle capacity is that where equipment cannot be effectively utilized for production. So this is the idle capacity. So they may ask you install rated capacity or install capacity, practical capacity, normal capacity, actual capacity, and idle capacity. Okay. So you should be very careful with this. Treatment of certain items in cost accounting. Because these are all overheads. What is it respect to treatment? Because they may ask you for theory question also with this concept. Now, interest and financing charges, packing expenses, fringe benefits, research and development cost. I'll come back from down to above. Research and development, if it is related to production, treat it as a production overhead. If it is related to administration, treat it as administration overhead. If it is selling and distribution overhead. If the development cost is incurred in connection with particular product and should be charged directly to that product, such expenses are usually treated as deferred revenue expense and recovered as a part of cost per unit when the production is fully established. Fringe benefits, the indirect benefits stand to improve morale, loyalty, and stability of employees toward the organization. If the amount of fringe benefit is considerably large, it may be recovered as a direct charge from by means of supplementary wage rate, or it can be treated as production overhead. If the amount is large, you take it from the labor cost. If it is amount is small, you treat it as a production overhead. Packing expense, cost of primary packing will be part of cost of production. Cost of secondary packing would be selling and distribution overhead. Interest and finance charges usually we do not consider as a part of item in the cost accounting books. They should be shown as a separate item in the cost accounts. So this is the topic theory related to cost account overhead chapter. We'll also work out from our material also. Right. So because our material theory is exhaustive, so please revise our material also. So by what is the classification of overheads by nature, by function, or by element, or by controllability? So by function, factory overheads or administration overheads are selling and distribution. By nature, fixed overheads, variable overheads, or semi-variable overheads. By element, indirect material, indirect labor, indirect expense. Controllability, controllable cost, and uncontrollable cost. How will you estimate the manufacturing overheads? First, you need to collect information of overheads by invoices or stores equation or wages or journal entries, etc. Then you should need to do first allocation. Allocation is not possible. Apportionment. So, apportioning is different. If it is a labor related, you should go by labor rate, like mission rate, like insurance, maintenance, and depreciation based on mission related factory overheads. Space rentals, like space, service related cost. Okay, either can be done based on labor or mission hours. One allocation apportionment is done, then we need to reapportionment. Reapportionment, from reapportionment, then you need to work out the absorption rate. That is the amount which is recovery from units. Now reapportionment, we have direct method. So here the budget cost of service departments are apportioned among the production departments, ignoring the reciprocal services. So normally direct labor hours is the basis for computing the production department's factory overhead application rate. Step method. In situation where one service department renders services to another, the step method is more appropriate than of direct method. So what it will do is that first, the service department which is providing major services to other departments should be apportioned. Then next. That means, for example, service department is there. Three service, which is providing more amount of services will be apportioned. Then with the apportioned amount, second one will be apportioned and will not apportion again back to the original one. And assuming that second largest is second, that third largest is third, then it will be apportioned only to production cost centers. Okay, so this is the step method. Next one, reciprocal services method we are discussing. Repeated distribution method. Here what happens is that first service department will be apportioned to all. Again second service department again will apportion to including first one. This reapportion will happen till it becomes negligible amount. So that is the repeated distribution method. Simultaneous equation method, by using a equation we'll try to work out, by algebraic equation we'll try to work out the service. For example, there is a department X, how much the total amount plus how much it is providing to other department. Y, what is this respective amount? 8,000 plus 0.2 of X. We'll substitute this amount here, we'll find out X and Y. That is a repeated algebraic equation method. Trial and error method, it is also you'll get information like simultaneous equation method only. So you again reapportion to the extent of service departments only. Trial and error method, you will apportion between only for service department until it becomes zero. The final amount will be apportioned to the production cost centers. So this is the repeated distribution method or algebraic equation method or simultaneous equation method or trial and error method. Absorption overhead. Now blanket overhead, when you for the whole factory, if you find out only single overhead rate, that is called blanket overhead rate. There are advantages and disadvantages because in organization you may have a different type of unit, different type of production facilities, different type of units. If I use only single overhead required, you will get cost distortion. Multiple overhead rate, yes, based on units, direct material cost, direct labor, prime cost, direct labors, mission hour rate will work out. Now, in terms of mission overhead rate, you need to bifurcate all the costs into standing charges and operating charges. Standing charges means fixed, variable cost is mission expense. Then you need to find out the mission hour rate. Under absorption, over absorption of overheads, we have discussed, and what is the treatment also we have discussed. Concepts related to capacity also we have discussed. Treatment of certain items in cost account is very important for theory part. Now, small tools of short effective life, what is the treatment? Like depreciation of small tools may be charged to factory overheads. Overheads of the department using the small tool. Unsuccessful research and development, it is written off to profit and loss account. Selling and distribution expense, you should recover based on percentage of cost of production or rate per unit sold or percentage on selling price. Interest and finance we have discussed. Depreciation we have discussed. Packing charges, primary packing, palm part of prime cost, and secondary distribution is a palm part of distribution cost. Fringe benefits we have discussed. Erection of machines is production overhead. If it is due to faulty planning, take it to P&L account. Bad debts, these are financials, they should not be included in cost accounts. If it is a part of selling and distribution overheads, take it as a selling and distribution overheads. Training expense is a part of factory or if it is a cost of production, if it is a selling overhead, if it is a distribution overhead. Night shift allowance, workers in the factory which operate during night time are paid some extra amount known as night shift allowance. Amount incurred due to general pressure of work beyond normal capacity level is treated as production overhead. If additional expenditure on night shift is incurred to meet some specific customer order, then it will be charged to customer only. So these are the topics of overheads. Okay. Now, if you see how the apportionment will be done, sir. For example, you have power. Here you have hours power for mission based on the till apportion. So we cannot be exactly, you need to consider proper apportionment base for apportionment of the overheads. Okay. Now, what is there in our Marathon? Question number 6. Modern Mission Limited has 3 production department A, B, and C, and 2 service department D and E. From the following figures extracted from the records of the company, calculate the overhead rate per labor hour of production department. Total direct labor hours of department A and B and C are 5,000, 5,000, and 2,000 respectively. Sir, if you have any direct material, direct labor, please do not reapportion, because please do not allocate or apportion, because The chapter is pertaining to only overheads. Primary distribution, secondary distribution of overheads is applicable only in case of overheads. Now, indirect materials, what would be the apportionment based on direct materials we can have? Indirect wages based on direct wage. Depreciation on machinery based on value of machinery. Depreciation on building based on floor area. Electricity power machinery based on HP power of machine. Electric power for lighting based on light points. General expense, they are going straight away what is the apportionment of each amount. The expense of service department D and are apportioned as follows. Department D should be apportioned to A, B, C, and E. Department E only 30, 30, 40. So first you need to apportion D. Whatever the amount you get in terms of E, again reapportion between 3:3:4. Okay, so that is a small question in terms of question number 8. See here, first you'll apportion D. Whatever the balance comes, that will be apportioned to A, B, and C. Distribution method. Next one. Question number 9 also, because it is based on trial and error method. A factory has 3 production departments, P1, P2, and P3, and 2 service departments, S1 and S2. Budget overheads for the next year have been allocated a portion by the cost department among the 5 departments. The secondary distribution of service department overheads is pending, and the following details are given to you. P1, P2, 3, what is already overhead portion allocation they are given. What is the estimated level of activity is also given. So based on this only, P1 based on labor hour rate you need to work out, P2 based on mission hours, P3 based on labor hours. Apportionment of service department. S1 is 16,000, sir. It should be apportioned to P1, P2, P3, and S2. S2 is also service department, sir. It should be apportioned between P1, P2, P3, and S1. This is a reciprocal service method. You can apply based on algebraic equation method. Correct? So how will you work out trial and error method, sir? Please understand, this is very important. So if you understand this one, because in examination they may ask this point to be they may ask this question in the examination. Now, in terms of problem number 9, now this is all production departments. The only issue is that redistribution. Let X be the total overhead of S1. Y be the total overhead of S2. Now, X is what? S1. What S1 will get? 16,000 is already incurred. From S2, how much portion of S2 will come to S1 number? 10%. 10% of Y, 0.1 Y. Y is equal to, what is the Y amount? 24,000 plus Y will get share of X. How much amount? 20%. So 0.2 X. Then substitute X and Y, you will get the amount of overheads. That amount, if S1 you got some amount 1 lakh, S2 somewhere about 2 lakh. A portion between 20:40:20. Here you need to apportion between 10, 20, and 60. So that is that amount we need to apportion between production cost centers P1, P2, P3. So this is how we need to derive the equation and how we need to work out. Okay, because service simultaneous equation, even if you work out repeated distribution, also same answer. Simultaneous equation method also same, because it's under reciprocal service method, or you can go by trial and error method, that is also correct. Okay, total problem number 16. The total overhead expense of a factory are 4,46,360. Taking into account the normal working of the factory, overheads was recovered in production at 1.25 per hour. That is absorption rate. The actual hours worked were 2,93,104. How would you proceed to close the books of account, assuming that besides 7,000 units produced, of which 7,000 were sold, and there were 200 equivalent units of work in progress. On investigation, it was found that 50% of unabsorbed overheads was an account of increase in the cost of indirect material and indirect labor, and remaining 50% was due to factory inefficiency. Also give profit implications of the method suggested. Now, how much is the expense incurred? 4,46,380. What is hourly rate? 2,90,000. I'll take a calculator. 2,93,104 into 1.25. How much is incurred? 3,66,000. 3,66,380. Incurred is more, absorption is less. This is called what? Under recovery. How much is under recovery amount? Under absorption 80,000. Now tell me whether under absorption is significant or insignificant. Significant. If it is insignificant, please take it to costing P&L account. There is no worry with that, right? If it is due to faulty of that, now faulty means 40,000 should be apportioned to P&L account because due to fault inefficiency. Other than that, it should be apportioned between by using supplementary between cost of sales, finished goods, WIP. See, this is equal units is important. WIP how much amount? 200. Finished goods 800. Cost of sales 4,000 units. So we need to apportion this amount between these two, and you need to post the entry. What is the entry? Cost in P&L account debit, cost of goods sold account, finished goods account, WIP control account to overhead control account. Understood? So this is what you are supposed to work out, the under absorption or over absorption of overhead. Clear? So this question is about under absorption or over absorption of overheads. Now, problem number 22 and 26 is for machine hour summer. So I'll discuss 26. 26 is also based on under absorption or over absorption. And ABC Limited manufactures single product and absorbs the production overheads at a predetermined rate of 10 rupees per machine hour. What is this question number? Question number 26. At the end of current financial, it has been found that the actual production overheads incurred were 6 lakhs. It included 45,000 on account of written obsolete stores and 30,000 being the wages paid for strike period under an award. The production sales data for the current year is as under: finished goods 20,000, work in progress 50% complete in all aspects. That means equivalent units would be how much amount? 4,000. Sales finished goods 18,000. So 18,000 sales, 2,000 closing stock, 4,000 work in progress unit. Okay. So if you want to apportion, it is 18,000 cost of sales, 2,000 finished goods, 4,000 equivalent WIP. The actual machine hours worked during the period were 48,000. It has been found that 1/3 of the under absorption of production rate was due to lack of production planning, and the rest is attributable to normal increase in cost. Production planning means take it to P&L account. Normal increase cost means you should between cost of goods sold, finished goods, and WIP. Calculate the amount of under absorption or over absorption of overhead. And what is second one? Show the treatment of under absorption or over absorption of overheads. Now, what is the overheads incurred among 6 lakhs? Out of this 6 lakh, 45,000 and 30,000 is the abnormal amount. So what is absorption amount? Absorption amount is 6 lakhs minus 30,000 minus 45,000. What would be the amount? 5,25,000, correct? And how much is the absorbed amount? 10 rupees per machine hour. How many machine hours are there? 48,000 machine hours. So 48,000 10, how much amount? 4,80,000. 4,80,000 is absorbed, 5,25,000 is incurred. So you'll be having 45,000 as under absorption. This is 45,000. Out of that, 1/3 is due to production, lack of production planning. So 15,000 will go to costing P&L account. Remaining will be apportioned between 18:2:4 or 9:1:2. So that is the entry. Okay. Now, question number 22. ABC Limited and ABC Enterprise Limited undertakes 3 different jobs, A, B, and C. All of them require the use of special machine, also use of computer. The computer is hired and the hire charges works out to be 4,20,000 per annum. The expenses regarding the machine are estimated as for rent for the quarter, depreciation per annum, indirect charges per annum. If you are given quarter, if you are given annum, please understand in the examination. The following details of the job taken. Number of hours the machine was used. Without the use of computer, 600, 900. With the use of computer, 400, 600,000. You are required to compute the total machine hour rate. For the firm as a whole, for the month when the computer was used and the computer was not used, for individual jobs A, B, and C. Now, highlight this important point. Here it is month, it is quarter, it is annum. Convert everything into month. Now, quarter 17th on 500 means how much per rent per month? 17th on 500 divided by 3. 5,833. Depreciation, how much amount per month? 16,667. 1,50,000 divided by 12, 12,500. How much amount? 35,000. How many hours machine was worked, sir? 600 plus 900. How much amount? 1,500. This is 2,000. How many machine hours are worked? 3,500. Machine hour rate without the use of computer. Now, 35,000 divided by 3,500. How much amount? 10 rupees. And extra computer charges how much? When computer is used, without the use of computer, 10 rupees. When the computer is used, you are paying 4,20,000 per annum, right? 4,20,000 divided by 2,000 hours. What is computer charges per hour? 4,20,000 rupees is a computer cost, right? Per month, 2,000 hours you are using. Per annum to be 24,000. So then what is the rate? 17.5, correct? Per month you are using 4,20,000 divided by every month you are using computer for 2,000 hours. So how much you use it per annum? 2,000, or you can take 4,20,000 per month. 4,20,000 per annum. Per month would be 4,20,000 divided by 12. How much amount? 35,000. Divided by how many hours you are using? 2,000. How much amount? 17.5. Correct? Now, machine hour rate when you're with the without the computer, 10 rupees. With the use of computer, machine 10, computer 17.5. How much amount? 27.5. For individual jobs, let us assume for individual jobs of A, B, and C, 600 into 10, correct? And with the use of computer, you are using 400 machines, like 400 into 10 rupees plus 400 into 17.5. Okay, then you'll arrive at 400 into 27.5, right? 400 into 27.5. How much amount? 11,000. This is how much amount? 6,000. Total how much amount? 17,000. How many hours total? 1,000 hours. How much amount? 17 rupees is the mission hour rate for job A. Similarly for mission B, mission C. So what job B and job C? What you are supposed to do is that first you try to find out what is the mission rate. Second one is you try to find out the computer rate. If mission and computer is used, use both rate. If mission is only used, use 10. Then divide by total hours, you'll get the mission hour rate. So this is the concept of mission hour rate. Okay. And question number 25. So here company could produce 36.5 tons, consists of 365 days, all days break even, a normal allowed in the factory for 65 days. Sales were expected to be 25 tons during the year and plant actually produced 25.2 during the year. You are required to state the following. So they ask you what is rated capacity, question number 28, right? What is rated capacity? What is practical capacity? What is the normal capacity? What is the actual capacity? So rated capacity would be 36.5 tons. Practical capacity, and out of 36.5 tons, right? Divide by 365 days, and you need to reduce the normal allowance. So 365 divide 36.5 divided by 365 into 300. So you're getting 30 tons. So 36.5 divided by 365 into 365 minus 60 days. Normal capacity is based on expected 25 tons and actual capacity is 25.2. So this is a theory question which they can ask you for examination. Okay. Now I'll go through total overhead chapter. So if you have any doubt, you can just also ask me. So these all our questions, Amma. Our questions are explained in detailed manner in the regular classes. So this is boiler house if it is simultaneous equation method. First one, reciprocal step method, cost department. This is also repeated distribution method. Repeated distribution method, you use it for all, and triennial method only between service centers. Overhead absorption rates for different methods. This is the allocation apportionment case. Eighth one is also that. Ninth is also that. Ninth we have discussed. So mission hour rate. So in mission hour rate, you need to take between standing charges and running charges. Like question number 10, what are standing charges? Insurance is estimated life, depreciation is a running expense, scrap value, estimate repairs, power consumed, insurance, consumable stores. Whenever it is per month, so you can take it as a standing charges. So we need to take standing charges and running charges divided by total mission hours. You'll get the mission hour rate. So you need to go very carefully with allocation, apportionment, and reapportionment with respect to, and we have a comprehensive mission hour rate. Comprehensive mission hour rate, when labor rate is also included in the mission hour rate, that is called comprehensive mission hour rate. Otherwise, there will be only mission hour rate. So that is what we will be having two mission hour rates, two-tier mission hour rate. So this is all you can discuss. You can also look after them. If you have any doubt, you can just ask me. So you'll get clarity about all the topics. Okay. So be careful with all these chapters, overhead chapter or any other chapter. We have discussed about marginal costing, standard costing. Because marginal costing and standard costing is pakka, you'll get examination. ABC simple and you'll get 10 marks. Then budgets and budgetary control, employee cost, service sector costing, employee cost we have discussed, cost sheet we have discussed, unit and batch costing we have discussed, job and contract costing, material cost, cost accounting system, process and operation cost, joint and byproducts, overhead chapter, introduction. So introduction would be the next session. So I said, no, we have covered to the extent possible all the topics of major topics of cost, about 14 to 15 hours revision we have done in terms of CA Inter Paper 3. So you please revise it, and I ask you to share this video to all the students. At the end of 15 chapter, I'm giving a small video about 9 to 10 minutes about the preparation. Okay, all the best. You can just reach out to me at my mobile number, which is there in the app, or email or telegram. Okay, thank you. The last part of the marathon session is about theory part, which is introduction to cost and management accounting. So my expectancy with this chapter is about 5 to 10 marks, which is pure of theory part. So I'll be discussing this theory part purely from icai quick revision, reference material, and our material. So now, in terms of introduction to cost and management accounting, so total chapter overview is objectives of cost and management accounting. If you remember in our session, we have discussed about what is the meaning of cost, the difference between cost and expense, because so, and the cost is converted into expense and asset. So if the benefits are utilized, the cost becomes expense. The benefits are unutilized, the cost becomes asset. The scope of cost and management accounting, the roles and functions of cost and management accounting, the users of cost and management accounting, internal users and external users, the relationship of cost and management accounting with other accounting principles, the cost accounting using icai, the cost object, the 4 responsibility centers, and cost classification. Now here, I'm focusing more on cost, the amount of expenditure incurred on or attributable to a specified article, product, or service. Now, costing is defined as technique of costing and ascertainment of cost. So methods of costing and techniques of costing is put together costing. Costing is the process of ascertainment of cost. Now, cost accountancy is defined as application of costing and cost accounting principles and the methods and techniques. Management application is a more wider sum. So cost accounting is a subset of management accounting. Management accounting is the application of principles of accounting and financial management. Now, when it comes to cost management, it is an application of management accounting concepts, methods of collection, analysis, and presentation of data. So more important is costing and management accounting. Now, what are the objectives of cost accounting, which they can give you for 5 marks? First objective is ascertainment of cost, because the costing itself is cost, methods of costing and techniques of costing. Methods of costing is the format used for ascertainment of cost. Techniques of costing is for decision making. So second one is determination of selling price and profitability, because so you can majority of if the selling price are not driven by competitive prices, normally you will fix the cost. You'll understand what is the total cost. For that, you need add profit. Then you'll arrive at the selling price. Cost control, cost reduction. Cost control and cost reduction are both of the objectives of cost accounting. So cost control is that maintaining discipline in expenditure is one of the main objectives of good cost and management accounting system. Whereas in terms of cost reduction, it is a permanent reduction in the cost, real and permanent reduction in the cost. For example, you are using a machinery which they can produce 10 hours, 1 unit in 10 hours. You have replaced the machinery with the high end where the 1 unit is produced in 5 hours. That is a permanent reduction. Cost control is that by using what I can say, unskilled labor or unquality material, you can reduce the cost control for some period. Whereas cost reduction is a permanent reduction. Cost control is the what I can say. It always checks with your standard cost and it tries to say reduce, but that is not a permanent reduction. Okay. Assisting management in decision making, that is one of the objectives of cost accounting. The scope of cost accounting is wider. Cost analysis, we can do cost comparisons, cost control, cost reports, and statutory compliances. The roles and functions of cost and management accounting. It provides the relevant information for management in decision making because it is more useful for decision making purpose. Assist the management for planning, measurement, and evaluation and controlling of business activities. It also helps in allocation of cost to products and inventories for both external users and internal users. So if it comes to functions of cost and management accounting system is collection, accumulation of cost. After collection, ascertaining cost to cost object. Then you need to prepare the budget and you need to create the standards. Then you need to provide the relevant information for decision making and gather the time for wastage of the and prepare necessary reports and take actions. The users, internal users, we have managers, operational level staff, and employees, which are internal users within the organization. External users, regulatory authorities, like your MCA may ask you cost data, government may ask you cost data for giving different aspects like subsidy, etc. The auditors, yes, cost auditors and statutory auditors will ask for the cost data. Shareholders, yes, they may ask you the cost data. Creditors and lenders, to understand the profitability, they may ask you cost data. Next. And if you see the interdisciplinary, the management accounting, cost accounting, and financial accounting is more of each interrelated. So that is a simple understanding about this part. Now, in terms of cost control, there are 4 things because I want to explain here cost control. In terms of cost control, first you'll put the standard, that is a predetermined cost. Then you will measure the actual cost. Then you'll measure actual cost with the predetermined standard and you investigate the variances because standard costing is one cost control measure. Okay. Now, in terms of cost reduction is a permanent reduction in cost. So, to be termed as a cost reduction, it should satisfy 3 important conditions. First important point, there should be a permanent reduction in cost and there is a savings in unit cost, and such saving is permanent in nature, and quality and utility of the goods are not unaffected. So that is the important point. The difference between cost control and cost reduction is important question for examination. So cost control is preventive, cost reduction is a corrective function. Okay. Now, and the difference between cost accounting and financial accounting is also important. So it is available in our material. So you can please go through that. That is also important part. Now, when it comes to essentials of good cost accounting system, any accounting system should satisfy these 6 points. It should be informative and simple. Sir, it should be tailor-made and it should be practical, simple, and capable of understanding to anyone. And the accounting system should be accurate and authentic because internal users are using, external users are using. If the data is not authentic or accurate, it gives to improper decisions. Uniformity and consistency. So the classification, treatment, and reporting of cost data should be uniform across the different units in the industry. Integrated and inclusive. So for example, I'm preparing financial accounts and cost accounts separately. So it should not be like that. It should be integrated. Both should be maintained in the same system. What are the information, I should take it from the one system itself. Flexible and adaptive. If there are some changes to be made to the cost accounting system, I should be able to do it. Trust on the system is very important because management should understand the information given by the cost accounting department is correct and we can believe on that. That is an important point. Installation of cost accounting system. So first should understand what is the objective of this one and what is the nature of business, because different industries will have different costing system. Like for example, in terms of oil business or oil marketing companies, they may use time costing. Okay. An organization hierarchy is important, knowing the product for which you are preparing cost accounting, knowing the production process, information synchronization, method of maintenance of accounts, statutory compliance and audit, and information attributes. So these are all important for good cost accounting, installation of cost accounting system. Cost accounting with the use of IT is very important, because now ERP plays a very important role in terms of organization. Earlier we used to write number of pages, number of documents. No, when the data is entered in ERP, what of the report I am getting at accurate data. So with the use of information system, cost accounting system gets integrated and automated. So by using enterprise resource planning, functional, once ERP got, for example, earlier invoices to come to the accounts office, they used to post the entry. Now what happens at the factory level, when the inventory gets, if they can post the quantity received, automatically value gets posted and payments are also going on. So that is how the ERP changes the way the cost accounting system works. Second one, paperless environment, it is smooth. So because with IT everything is through systems, it is reduce the paper. Internet, using information technology with the help of internet are helping in resource procurement and mobilization. For example, I can get materials without issuing shows. I can just by sending an email, I can do it. With JIT system, just in time, I can access the inventory module of my suppliers or my customers. If the quantity is reduced by this time, the automatic purchase order will be placed and the units will be dispatched. Just in time is also important, and cost information for a cost center cost object is getting very easily. Uniformity is maintained, and where the variances, no need to work out individually, the variances are calculated on a minute to minute basis, and it is able to analyze each and every part, because in terms of material price variance we'll be working based on consumption based, but in terms of IT, at purchase price variance we can able to understand it. Okay, so these are the examples with the use of IT. Next important point is cost object. Cost object is anything for which a separate measurement of cost required. So if you wanted to find out the cost of this product, mobile, that is one cost object. You want to calculate for this calculator, that is one cost object. If you are running an institution, you want to find out the cost of CA Inter, that is one cost object. If you are doing a construction activity, if you want to find out the cost of one flat, that is a cost object. For which you wanted to maintain a, if for which you wanted to find out the separate cost, that is we called as cost object. Now, second one is cost unit. It is a unit of product or service or time in relation to which cost may be ascertained or expressed. Now, for example, cost of each student, cost of each meal, cost of each flight, cost of each room, so cost of each book. So for which, if you want to express a cost, that is we call as what cost unit. Cost driver is a factor or variable which affects level of cost. This is we discussed in activity based costing. They will be having activity cost drivers, right? Now, for example, which drives the cost is cost driver. For example, if you remember in activity based costing, in purchase department, number of purchase orders will determine my cost. If number of purchase orders are increasing, my purchase department cost is more. The number of purchase orders are less, my purchase department cost is reduced. Now, what is the cost driver in purchase department? Number of purchase orders, right? Like in terms of inspections, number of inspections. So that is how we need to work out cost driver. Now, responsibility centers are 4: cost center, revenue center, profit center, and investment center. This we have discussed with a very beautiful concept with BPCL, if you remember. Cost center is a location, place, or item of equipment for which cost is ascertained and used for cost control. Now, cost center, so to the lowest level in the organization where you wanted to find out the cost, that is, we put it as cost center. So for some organization, cost center and cost object may be same. Like for example, in a contract costing, my lowest level is a flat. I want to find out the cost of the flat. Cost center and cost object remains what same. Revenue centers, they are responsible only for generating the revenue, like all our marketing centers. Or if you see some bakeries like Fresh Choice. The factory is at one, but locations, the selling units are at different, right? Those we call as revenue centers. Profit center is the combination of revenue center and cost center because they're responsible for profit. Investment centers, so they are not only responsible for profitability, but also the authority to make the capital investment. And if you remember what is evaluation of these cost centers, in terms of cost centers, you'll be comparing standard cost versus actual cost. In terms of revenue, budget revenue compare with actual revenue. In profit center, budget profit comparing with your actual profit. Investment center, budget return on investment comparing with your actual return on investment. Correct? Now this is the evaluation of your, because why I kept responsibility centers to give the responsibility. Cost center head is responsible for its cost. So predetermined cost is given, that is standard cost, comparing with your actual cost. If it is positive or adverse, you will be responsible. Revenue centers are given a target to sell these number of units. What is actual revenue? Profit center, they are responsible for profit. That is revenue centers and cost centers. Budget revenue minus standard cost is nothing but then your budget profit. Budget profit compared with your actual profit. Investment center says, I have given this fund to make investment. I'm expecting this return on investment. What is my actual return on investment? Now, cost centers are bifurcated into standard cost centers and discretionary cost center. Standard cost center, where output is measurable and input required for output can be specified. Discretionary, the cost center whose output cannot be measured in financial terms. Now, it comes to classification of cost. This also we discussed in terms of cost sheet. Classification of cost can be in different ways. Now, if I go by element wise, I have three elements of cost: material cost, labor cost, and expenses. In material, there is a direct material, indirect material, labor cost, direct labor, indirect labor, other expenses, direct expense and indirect expense. So for cost object, I'll put one point here. So for which cost is for anything for which separate measurement of cost is required, right? In study material, if you see page number 1.17, product for smartphone you can do, for service an airline flight, project metro rail project or something, activity, inspection, quality inspections, or process, refinement of crude, department, production department, or finance and accounts department, etc. Cost unit also they may ask you, like automobile, what is the cost unit number in terms of cement per ton, chemicals per liter per gallon, power kilowatt hour, steel per ton, transport passenger kilometer, gas cubic feet. Okay. So some more examples are also given. Please refer to the important point in terms of costing, because in examination they'll give you industry and asking what is the cost unit. Okay. Right. So elements of cost: direct material, direct labor, direct expense, indirect expense, and indirect material cost plus indirect labor cost plus indirect expense put together we call as what overheads. Function wise, I have a prime cost. This is all we discussed in cost sheet, right? Factory cost and cost of goods sold and cost of sales. Variable device, fixed cost, variable cost, and semi-variable. Semi-variable we can bifurcate into variable part and fixed part. Cost for decision making. By controllability, if it is a controllable cost which can be controllable by the management, uncontrollable cost is other than controllable cost. Normally, those costs which are incurred normally in the business is called normal cost. Abnormal cost is separate one, other than normal cost. Abnormal costs are taken into profit and loss. By cost for managerial decision making. So predetermined cost is a standard cost. So which is before the production starts, if the cost is computed, that is called predetermined cost. Standard cost is also a predetermined cost, but which is calculated from management expected standards of efficient operation. Marginal cost is the extra cost of producing one more unit. Estimated cost is that often more used on the base of information available in advance of actual production or purchase. Differential cost also we discussed in marginal costing. It represents a change in total cost due to change in activity level. It can be incremental or decremental. Imputed cost are the notional costs which do not involve any cash outlay. This is used only for decision making. Capitalized costs, those are recorded as assets and subsequently treated as expense by way of depreciation. Product cost and period cost also we discussed in marginal costing. Product cost is that those costs are considered for inventory valuation. Opportunity cost is the value of sacrifice foregone or benefit of opportunity foregone in accepting alternative course of action. Out of pocket cost is the portion of total cost which involves cash outflow. Shutdown cost, those costs which continue to be incurred even when the plant is temporarily shut down, like for example, security guard, etc. How to find out shutdown point amount? Avoidable fixed cost divided by contribution per unit. Sunk cost, yes, those are costs incurred in historical cost and not irrelevant for decision making. Absolute cost is the what is the cost of this product or process or unit. Discretionary cost is that so this is discretionary. So if I want to incur cost, I'll incur. If I do not want, I do not incur. Period cost is that so you need to understand the difference between product cost and period cost. Period cost is that those costs are not assigned to products but charged as expense against the revenue of the period in which they are incurred. Because these costs are incurred based on period. Period means time, like your rent, etc. Engineering costs, these are the costs that result specifically from clear cause and effect relationship between inputs and outputs. Explicit cost is out of pocket cost, which I'm paying from my pocket. Implicit cost and imputed cost more or less same, so decision making. So this is the different parts in terms of cost and management accounting. So I'll also take you to the material. So this is the important topic in terms of theory part. So difference between cost accounting and management accounting. Difference between cost accounting and management accounting. It records cost accounting is only quantitative, management both qualitative and quantitative. Objective is finding out the cost. Management accounting is of decision making. Area is only deals with the cost ascertainment, whereas management accounting includes accounting, financial accounting, budgeting, etc. Recording of data, it uses both past and present figures. Whereas management accounting is projections of futures, figures for future. Development is related to industrial revolution. Development related to need of modern business world, rules and regulations. Now, for example, if you see why the cost accounting is important, because if CA final will be discussing strategic cost management. Now, for example, if you see the jewelry shops earlier, it used to be very small. Now, if you see all the jewelry shops with a lot of inventory, a lot of overheads, they are running the jewelry shops. Profit remains same, but the problem is that the thinking of the customer got changed, and the industry people also got changed, right? Cost accounting with financial accounting. So this is also very important. So which they can ask you for 5 marks. Please read this one also. Cost accounting with IT also we discussed. This is what I'm explaining you in terms of cost object. Cost unit is automobile number, cement per ton per bag, chemicals per liter, gallon, kilogram and ton, power kilowatt hour, etc. Steel ton, transport passenger kilometer, gas cubic feet. Some more examples from SEMA terminology: brewing, barrel wise, brick making, 1000 bricks. This is very important. Please read this even in the examination. Okay. So coal mining per ton per electricity per kilowatt hour, engineering per contract or job, oil marketing companies per barrel wise will take it. Hotel per room, professional service per hour, education per student, hospitals patient per day. It comes to activity, Credit control, number of accounts maintained, selling, customer call, cost for each customer call, material storage and handling, requisition unit issued, material movement, etc. Personal administration, cost of each person. If you remember, there are few assignments which are getting for CA forms is that every month you run the payroll, per each employee will pay this amount, like PF, ESI, PT, etc. Cost driver, factor influence in the cost, right? Responsible centers we have discussed in detail. So these all are the different types of cost. Now, by the bifurcation of semi-variable and variable part in terms of fixed part and variable part and semi-variable. So it can be graphical method, high-low method, analytical method, comparison of period of level of activity method, least square method. So these are different types of cost. And as I discussed, methods of costing and techniques of costing. So these are the methods of costing. Methods of costing is for finding out the cost. Single cost, batch costing, job costing, contract costing, process costing, operating costing is for service industries, multiple costing. In the industry, when you use more than one type of method of costing, that is called multiple costing. It is not a separate method, it's a combination of one or more methods. Techniques of costing is it's a structure of cost estimate for decision making. Uniform costing. Uniform costing means all industries in a unit are following same method of costing, that is called uniform costing. Like in HPCL, BPCL, IOCL, they follow only similar cost. Margin costing, differentiating variable cost and fixed cost and use it for decision making. Standard costing and variance analysis. Historical costing is ascertainment of cost only after they have been incurred. So this happens when after production is completed and you cannot work out unless the job is in progress, cannot work out. Absorption costing, where the all variable and fixed production overheads are charged to product, whereas in margin costing only variable part are charged to product. So this is all about introduction to cost and management accounting. So the full marathon session we have discussed in detail. So I already said this is only only for those students who have already prepared for the total syllabus, and this is more about revision marathon. So you'll be getting, so what are the topics we have covered, please read again. This please share to everyone also, so that if you are missing any topics, those topics we have discussed in detail in terms of this marathon session. Okay, so you can also write your queries or email or telegram to my number, which is available in the app itself. Okay, thank you. Come on, students, we have ended up with marathon session of around 14 to 15 hours. So many students ask me, sir, how can you secure those many ranks, and what is examination preparation strategy for? So are we doing anything wrong in preparation? So major times I get this question. So I'll not take much time of you, maybe less than 10 minutes. How to prepare for your examinations, okay? Especially with respect to costing. Now you always follow this concept of ABC analysis here. Sir, ABC analysis is not about important, unimportant, or most important or least important. I always feel one concept when I prepare for examination. Don't prepare for ranks. Some of you students might be wishing to get a rank. Don't prepare for a rank. Prepare for marks. Automatically that will bring you all India rank. Out of my 5 all India ranks, I never prepared any time for rank. I always tried to put a target for how much I should get for each subject: accounts, costing, law, auditing, so advanced accounts, yes, ITSM, etc., etc. If I get a more amount of marks, obviously that will fetch me the rank. So don't put in mind the pressure of getting an all India rank. First, remove that concept. Second point, sir. Second point is what I say is ABC analysis. Now let us assume there is a chapter called marginal cost. In our material, let us assume there would be 1 to 30 questions. What many students they do is that when they do for revision, they do like this: first one, question number 1, go on, question number 2, takes lot of time. Out of 30 questions, I say that when you are listening to the class, either my class or any other class, 10 questions would be of easy, which no need of any revision. You mark those category questions as A. You mark those category questions as what? A. Then what happens? So you need to revise only 20 questions, which are of B category and C category, because this is only the important tip I give it for examination, not any other tip, whether it is related to theory tip, theory subject or practical subject. When you're going for the examination, you should be very confident. The confidence comes when you revise the topics before the examination. Now, B category is what, sir? You are understanding, but if little bit of another revision would convert my B category to A category. C is little difficult, sir. By doing revision, I can move from B to A, because concept may be little difficult, may be lengthy. So you may feel little difficult, because A category means even if you sleep, if you wake up directly, you should solve that question. B category means, yes, revise and you can move to next category. So out of these 30 questions, after 2 revisions, you should move from B to A and C to B, not from A to B and A to C, not from easy to difficult and most difficult. And in one question, for example, in one question, there may be only one word which you wanted to highlight, like garaged. I said in terms of service cost. You highlight that point. So when you're moving, let us say of 2 revisions, I am sure that out of these 30 questions, you can move, B category would be somewhere about 5, C category would be about 5. Before examination, you'll be having somewhere about 1.5 day, around 15 to 16 hours. Open a chapter, read theory, look after only A questions, B and C you practice before examination. And instead of doing 30 questions, what many students they do is that they take the book and start revising before examination. This is not intermediate examination, 10th class examination. You will not have time to revise all the topics. Maximum 3 to 4 chapters you can complete Monday, then your tension comes, then you leave everything. No. Then you'll make hurry. You should have a plan. While preparing also should have a plan. Sir, if I'm waking up 6 a.m., what I should read? 7 a.m., what I should read? Up to evening, what I should read? You should have a table for that. I used to prepare that table. When is a revision? Okay, if time permits, write some exams for practice purpose. So when you're, for example, out of, let us assume costing, we may have somewhere about 400 questions. You try to reduce it to 100 questions. Before examination, read theory, do these questions. You are assured that you'll prepare, you have covered all the topics and go to examination with confidence. I see many students before examination, they start reading it. Don't read that. That is because of lack of confidence. Like these words, you highlight it, you write down in the notes. Okay, before examination, in each this question, I should look after this question, this point. This is little difficult. And important point is that when you're revising, your notes should be fair. That means as if you're writing in the final examination, you should do the practice. Don't do hurry. Put a time. If this question comes for 5 marks in examination, 5 into 1.8 minutes average, should be able to finish in 9 minutes. 9 minutes. Okay, this question, how much time it took? If I took for 11 minutes, can I able to reduce any steps? That is also important. So each question when you're revising itself, make sure that you are right, as if you are right. This question comes in final examination, how we are going to do this. So this is one important technique in preparation thing. Okay. So don't be hurry. So when preparing itself, you should able to do it as if the final question comes. Otherwise, you'll face the difficulty. And always target for 70 to 80% marks in the practical subjects. If you're very good at practical, 70 to 80 you should get it off. And learn 100% to the extent of 80% syllabus. And remaining is something is you should know something in everything and 100% in few chapters. Then only you can get exemptions. So if you follow these things, I'll not take much time. You're while preparing, you should prepare as if you are writing in the final examination. Follow ABC analysis. Mark the questions. For example, put category A, B, and C. First revision, whether it is A, not required. Second revision, if it is C. Second revision, whether it comes to B or A. And each question, what is the important point you write down? Before examination, try to check. Read the theory point in each chapter. And when you're writing distinction, first you write in differences. First you should write distinction, A versus B. Examination will see this and will get the marks. And I think already Harsha told in terms of how you present the writing sequence. So no need to write all the questions at one place. First impression is best impression. So write those questions which will get 100% of marks, then the next level. Okay. So revision notes is important. Your preparation notes will say you how much marks you'll get. And few chapters you should know 100%. If any question comes, you should be able to write down. Follow ABC analysis. And for every day, you put a target. For next week, I used to keep for next 4 months before examination, each day what I should read, each day I should revise. And finally, you are writing CA examinations. At some point of time between March and April, you will feel that, okay, I read many things, but I'm unable to recap it. Or there's few topics which are supposed to read, you'll be in tension. Don't worry, revise it. That is revision is the best method of success. Okay, take care.